Dear ladies and gentlemen, I'm Rytis Ambrazevičius, the president of the Baltic Institute of Corporate Governance. Welcome to our annual Corporate Governance Conference. Today, we are going to discuss environmental, social, and governance, ESG, one of the key topics of today in the boardrooms and in the companies across the world. It is a welcome coincidence that the day of our conference falls in the day of International Mother Earth Day. Environmental, social, and governance factors are rapidly gaining prominence across the world, and it's up to Baltic businesses to make sure that it becomes a new way for growth and sustainable long-term success. A real shift in business mindset and upgrade in corporate culture can help Baltic companies to lead the way instead of falling behind and to create stronger Baltic economies. Baltic Institute of Corporate Governance is delighted to welcome everyone to today's conference, where we will share Estonian, Latvian, Lithuanian, and Swedish experience on ESG with insights of true ESG practitioners, strategists, investors, and bankers. And if the interest we have gotten for this event is any indication, the importance of ESG is becoming increasingly realized across many businesses in all Baltic countries, with over 400 registrations received until now. My thanks to all of you for being here, for wanting to join the conversation, to lead the way, and to bring about the change. And now, some technical moment. Before we will start, I would like you to ask to be active in sending us questions via Slido platform, and then rate them in order to answer the most important to all of you. You should go to slido.com and enter 4 letters, BICG, capital letters. So for the welcome speech of our event, I would like to invite Mr. Valdis Dombrovskis, Executive Vice President of the European Commission. So let's see and listen for his speech.
Ladies and gentlemen, I would like to thank the Baltic Institute of Corporate Governance for inviting me to speak at your event, which I first attended when I was Prime Minister of Latvia around a decade ago. The Baltic Institute of Corporate Governance has always been at the forefront of transposing the best corporate governance practices to promote the transparency and competitiveness of Baltic companies. Its focus on helping companies to better manage sustainability-related matters goes hand in hand with the priorities of the European Commission. To quote our communication on the European Green Deal, sustainability should be further embedded into corporate governance framework, as many companies still focus too much on short-term financial performance compared to their long-term development and sustainability aspects. This makes today's discussion particularly relevant. It lies at the heart of transformational processes that the world economy is going through. The twin digital and green transitions are not only about a substantial rethinking of public finances and the massive investment needs of different areas of our economy. They are also about how companies conceive their strategies and run their day-to-day business. So, today's discussion will provide an important contribution to the necessary shift of mindset for the corporate sector in the Baltic states. While our immediate priority of protecting lives and incomes has not changed, the green transition remains high on the agenda too. Its urgency has become even greater as we rethink our economies in the post-crisis phase. We have unique opportunity to respond to the climate emergency as well as create growth and jobs for the recovery. However, it will take a great amount of funding and investment to meet the targets that the EU has set. To cut emissions by 55% by 2030 and to reach climate neutrality by 2050. This objective lies at the heart of the European Green Deal as we advance to sustainable economy. It will not be quick, easy or cheap. We estimate that it will take 350 billion euros in annual investment over the next decade to turn these ambitions into reality. This means investing in areas such as renewable energy generation, developing a hydrogen economy, electromobility infrastructure for cleaner transport, renovating buildings to make them more energy efficient. Shortly before the virus hit, we set a Sustainable Europe investment plan to generate more than 1 trillion euros over the next decade to turn Europe into the climate-neutral continent by 2050. Combining the Next Generation EU Recovery Programme with a reinforced long-term EU budget gives us a 1.82 trillion euros package, of which 30% of spending will support our climate objectives. To finance Next Generation EU, the Commission will issue up to 250 billion euros in green bonds between now and the end of 2026. This will make the EU the largest issuer of sustainable bonds on the financial markets. Then, each EU country, using its main funding instrument, the Recovery and Resilience Facility, must allocate at least 37% of spending on the Green Deal. Put all together, this will provide a massive amount of funding for tackling climate change. But it will still not be enough. We need private investment to fill the gap. This is why sustainable finance is so important. Europe started to green its financial system some years before the pandemic struck. Since that time, I am pleased to see that the Baltic states have taken an active role in scaling up sustainable finance. The 3 Baltic countries have now issued around 1 billion euros in green bonds, following Lithuania's example with the region's first issue in 2018. During the crisis, we saw a significant rise of investor interest in environmental, social and governance issues. The strong demand for social bonds that the EU has been issuing under the SURE programme is a good example. This is where EU's regulatory agenda comes into play, to stimulate more investment and capital flows into sustainable activities based on ESG criteria. We put rules in place on climate benchmarks and require ESG disclosures for benchmarks and indexes. We also have rules for financial advisors and providers of financial products to inform their clients on sustainability risks. These disclosures also include how investments affect environmental and social aspects, for example, investing in assets that might pollute water or harm biodiversity. We are also working on a new sustainable finance strategy to be presented this summer, building on our initial Sustainable Finance Action Plan from 2018. It will strengthen the foundations for sustainable investment. We will also propose rules for the EU Green Bond Standard and eco-label for green financial products. All this will make it easier for investors to invest in green activities and for companies to attract the rising demand. But first, we need a common language for green economic activities. Yesterday, the European Commission published the first taxonomy list of economic activities on climate change mitigation and adaptation. Companies also need to disclose information about their ESG activities so that investors know where to look. Rules on non-financial reporting already require large EU companies to disclose information on how they operate and manage ESG challenges. Also yesterday, we proposed new improved sustainability reporting rules for companies using common reporting standards to facilitate disclosures and comparability of information. While we need European standards, we will make sure that they build on and contribute to international ones as far as possible. We have also proposed a proportionate standard for smaller companies. This can also be used by companies that do not fall under the scope of the rules on a voluntary basis. However, this is not only about reporting ESG considerations, but also about embedding them into corporate governance. We are working on an initiative to allow companies to focus on creating long-term sustainable value, not just short-term benefits. It will help them to improve how they manage sustainability-related issues in their operations and value chains for social and human rights, climate change, and the environment. Thank you, and I wish you a very successful conference.
Many thanks to Mr. Valdis Dombrovskis. It is very important that European Union has a plan and even has the targets looking forward to achieve these targets, but by all the nations and the businesses in Europe. So now we will be continuing our conference and we'll be learning how we can engage ourselves in achieving these targets. To have a broader perspective on ESG issues and how we can move forward, I would like to introduce Mr. Raivo Vare from Tallinn, Estonia. He has been a member of the governing bodies of various private and public companies, public organizations, think tanks, and education institutions. He also acts as a consultant and lecturer. Raivo has a very wide view on global business issues, and he will share his insights on the critical mass needed for ESG change to happen. Welcome, Raivo.
Thank you very much, Ritas. I have great pleasure to present my speech here on your annual meeting of such an esteemed organization. And actually, I thought that I will take a couple of issues related to paradoxes. Next slide, please. What I'm speaking about. These two paradoxes are about in relation to governance component are related to crisis issues because it's so urgent right now that we have to speak about it also. And it's not only about EU developing through the crises, it applies to everybody and everywhere. And the second one is the issue of these three abbreviature letters about E and S versus G, or governance. Next slide. Let's start with the crisis, because it is actually a starting point right now, and it also has taught us something. Next slide, please. The crisis is, by estimations of World Bank, fourth deepest crisis since 1870. If you look at the graph on the left, you can see that the depth of the red line in global scale is actually the fourth after two world wars related and Great Depression related crises. But by the magnitude, it's even overtaking it because so many countries haven't been in crisis ever than they are right now. Next slide, please. If we look at the main issue is about the health issues against the economy interests. And it's exactly what we have lived through last year. It was about symbolically about masks and protection and closing down economies. And now we are putting very much hope on vaccination campaign and opening up economy and our activities this year. Next slide, please. But in theory, the depth of the crisis and the longitude of the crisis continuation is very much dependent on the how to say the drop and time, the depth of the drop and time. So longer it takes to be on the bottom and to be on within the crisis environment, more it takes to get out of it at the end, at least for part of our economies. Next slide, please. And here we have this key-shaped recovery issue. It's a common belief that usually when the normal crisis breaks out, meaning the cyclical economical crisis, then the new tide of recovery, the wave of recovery is bringing up all boats. Not this time. because this crisis is different and it's very much not a normal one in a sense. Therefore, the recovery will be like K-shape recovery. Some industries will gain even from the crisis, some will recover very quickly, but not all of them. And especially in tourism travel industry, HoReCa industry, there will be a problem, definitely. For example, the airlines are evaluating it to 2-3 years to recover from the present crisis. And maybe tourism will be impacted by it as well. And HoReCa takes, for HoReCa sector, it also takes time to get to the even present level. Next slide, please. Typical human attitude in a crisis is always the same. Being part of some governing bodies of some private companies nowadays, I can assure you, we live through it as well. First, it's linear prediction, which leads to underestimation of the gravity of the situation. The next is again a bit linear thinking, which predicts actually continuation of the crisis, depth of the crisis, and everything in overestimated mode. But actual situation is like you see it on this slide. Next slide. The business crisis trend is very typical always. It starts with shock, then there is a kind of desperation stage, then there is a very important stage of evaluation, what's going on, and reconfiguration and thinking out how to deal with it, and then deliberate actions taken. If they are not taken, then the line will be the lower one sooner or later. It's if the logic is only hold on and continue like it was, then it goes bust sooner or later, in new situations included. So the very important, most important period is actually this evaluation period and drafting the next moves for the new stage and recovery stage especially. So fortunately enough, in companies I'm involved in, we missed this desperation stage basically, and we moved right after some shock to this evaluation stage. So I hope that we are capable to make right decisions, or made already them for the new recovery stage as well. But in case of the state companies, sometimes it's not exactly the case, or even some industries. For example, I lived through, included in Estonia, this famous bronze night in April 2007, which actually brought down our transit flows dramatically, and they never recovered anymore. But not everybody was ready to admit it, to understand it, and to project the future in a different way. Let's go further. The next slide, please. So crisis is the best time for contemplating changes and strategical rethinking. So after the initial immediate adaptation to the crisis, the next issue is identify the demands of a vital areas, which also are called survival trap issue. So basically the point is that you survive first strike and then you start to contemplate how to proceed, and you have to make choices. And for example, in real estate, it's a difficult issue. And we had very careful selection of those, how to say, the focal clients, first of all, whom we worked with in close cooperation to preserve them and their interest being met as much as possible. And at the same time, we also made the decision, for example, that service sector will be hit so heavily that they have to be tackled completely different. So it's a kind of strategical choice game, and not an easy one. So the most important is to, in this survival trap situation, to avoid being caught in crossfires of all different interests in the crisis times. Next slide, please. On the other hand, this famous Chinese saying is that BICG, that any crisis is danger plus opportunity. And after identification of vital areas, there should be a consideration of opportunities and assessment of respective strategy. And there are very many options for those respective strategy in model level. For example, conquering additional market share, because if everybody is vulnerable, there is an opportunity. Adding new business line possibilities you haven't thought or have postponed before, or close down of existing activities and switching to something completely new, etc. So it's very normal, and it's exactly the decision in the governance sense of the, first of all, management body to work with it, and board of directors to be actually on their side and decide upon the issue. What would be the next strategy by itself? Next slide, please. The main paradox for me is lying with profit-oriented economic entity, always with this summa summarum issue against the sustainability, and in this kind of eternity, if I may say so. Okay, it's maybe be overdone a bit, but still, sustainability against the summa summarum. But it also means that there is an inefficiency as a basic principles, which sometimes is in contradictory with needs of new development. At least for a limited transition period will be some constraints and problems. And being once in my life in charge of the company, which had 72.3% net margin, profit margin, you can imagine that it wasn't an easy task to accomplish when there was a need for that, being at the same time the most efficient in its own segment as well. So I've lived it through. It's very difficult. Second issue, which is related, is short-term versus long-term perspective and preferences of stakeholders involved, because not always everybody thinks in the same way. It's obvious. And particularly in this case, there was a contradictory between expansion plans and accommodation of the new changing market environment needs with the desire of shareholders to preserve the existing very well working money machine as long as possible, but at the same time basically foreseeably stepping on their own throat in a sense, because losing time means also losing competitiveness afterwards. And of course there is an issue of different drivers from top to the bottom and from bottom up to the top, because for example, top is obliged to foresee. It's very easy to claim. You have to foresee. But at the same time, you can't expect that entire organization en masse will be ready to do it. No way. Always, we know that we have 15% of opposing share, up to 15% in each and every reform case, especially when there is a big change in the environment for business or there is a crisis. So it's a big task to accomplish. And what is the problem with it is that also in state-run companies, I have experience with being in board of directors of several of them, especially in infrastructure side and banking. I can tell you that it's not an easy thing, because there is a stakeholders, different interests. The state as stakeholder always have its own interests, and then you have a vast, actually usually they are big companies for the local scale, vast numbers of employees and structures with different interests, and to put them together is a challenge. Next slide, please. The environment is changing, not only physically but also in business terms. And Green Deal, as it was very clearly made by Euro Commissioner Dombrovskis right now before me, is the fundamental frame for EU strategical political stance. And they have put into it a chunk of big money, by the way. And it also means that it is not just only a political choice or just an environmental choice, but it's also a geostrategical even choice, if you want, because for Europe, it's an issue of preserving its global competitiveness in great scale or grand scale, if you want. And this is really challenging times, but also, and again, opportunity times. Another issue which is related, which was particularly stressed on by Commissioner, was about this financing issue, about the financials involved, and how to tackle with this new Green Deal related issues, especially in a situation where actually the European financing model is very much based on banks, and banking is the main financing source for the real economy. So it has a crucial importance. All these vehicles he was mentioning, they will help this transition in banking into the new, the needs of the new challenges. risks are growing in relation to the change of the model along the changes of the market in relation to environmental protection needs. Always, it's obvious, especially if the previous model was not very environmentally friendly. On the other hand, each and every business in the European Union should be aware of constantly changing and actually becoming more strict regulatory environment in relation with these issues. And this will put additional weight on doing things by each and every company in relation with issues which are environmental ones. And of course, the importance of ICO standards. Okay, standards as such, but especially those standards, ICO 14,000 and 50,000 family, which are related to both environmental issues for companies and for energy issues. So it's a kind of prerequisite for success in growing. So I would suggest, if anybody haven't them, just think about it and do it sooner or later. Another issue which should be taken into account is that energy sources are becoming more expensive, and energy efficiency expectations of the demand side are starting to prevail. In the real estate business, we already see it. Each and every international client coming up with an interest towards the deal are specifically stressing the point whether you are environmentally friendly. So all these standards you have to follow, LEED standards, everything. So you have to provide them as a marketing tool. Even without that, you won't sell it, and especially not with the price you want to. And of course, there is an issue which should be taken into account. That greenwashing is a disturbing factor to be cautious about, because with big money, which was announced by Commissioner, there will be always a interest of somebody to do something with this money to fit into the framework, but doing not real things. Next slide, please. Social economy is EU priority number 2 after digitalization, of course. Protectionist trends are strengthening along with the acceleration of the competition of economical technological platforms led by US and China. It's obvious now. Simply saying that geopolitics is messing with the economy more and more. And we have to be aware of, especially those who are doing something on the global markets between those economic centers. EU trying to sit simultaneously on 2 chairs is volatile in its responses. Supply chains are changing, especially in relation to critical components. Nearshoring, along with reshoring and onshoring, is a possibility for European companies. Exactly Baltic chance, by the way, because not everything can go back to Germany or Sweden, speaking frankly. There will be a great interest in landing those, at the moment, East Asian production somewhere close by, which leaves a chance for us in our region. Changes in consumer behavior and preferences accelerated by pandemic crisis and growing reliance on technological solutions and flexibility of supply are actually nudging all the time business models and market structuring on bigger scale and on particular entity scale as well. And of course, we have to take into account the growth of the grey economy, especially in Europe, and particularly in the Baltics, where, for example, Latvia is by prognosis is the leader of European aging in a share of age population soon. Changes consumer market further on, and we should adapt it ourselves to it. And of course, additional requirements for security and safety will complicate operations everywhere. Everywhere. It's not just any flying somewhere. It's about every transportation need. It's about any access rules. So more and more, and very much they are related also to environmental issues. Next slide, please. And finally, about ESG as a governance challenge. First, critical mass of input from all stakeholders is needed for ESG changes to happen. Unfortunately, it's not exactly always the case that each and every or all main stakeholders are taking part. It cannot be only management executed project. It's very important, but a wider effort process which needs active support for at least part of the organization members and employees from the bottom to the top. I lived it through, for example, with ICO 14,000 certificate, obtaining it during time in a logistical company. Nobody on the lower level was interested in that because everything was smoothly going anyway. But for the market purposes, already then we needed it, foreseeably needed it. So we made additional effort. We arranged things in a way that we engaged some people, in the key people in organization, to participate very physically and very in-depth in this project, and then it was a success. And sometimes it might take even a certain degree of cooperation from closest partners for support of changes. Again, in oil terminal case, for example, there was a reason to do it because the main suppliers were suffering along with us because of certain technical changes. And it was a good relationship which allowed to make those changes, even if they were suffering a bit because of that as well, because they were good partners in that respect, and they took this part burden on their shoulders as well. And change cannot happen at once. So it takes time and effort, strategical approach, and careful planning. No doubt about that. Next slide, please. Crucial role belongs to the owner's support to the whole idea of changes and agreement to see them as a process, which takes time and might bring along some setbacks. It's, again, a case which I've lived through several times. I've seen it in the commercial bank. We started from a small business bank and entered into the universal banking niche, which was completely different, technically speaking, and took a lot of investments and actually had an impact on our profitability for a time being. But it was a right strategical choice, but a lot of difficulties. It took time to get through, and it was not an easy to accomplish. The same actually might be a case with state-run operators, because, for example, in infrastructure companies, I've been in the governing bodies. I've seen it where state was postponing decision as a key owner of most important or key investments for the considerations of fiscal nature or other. Doesn't matter even which are those considerations, fiscal or usual ones, usual suspects. But anyway, postponing decisions on crucial or critical investments is losing time simultaneously, and time is money at the end. And it applies even to infrastructure companies, not mentioning others. Again, the most challenging for owners could be a loss of some profit due to the impact of changes, especially when currently it's in a good shape, like I was telling you about the company having 72.3% net profit margin. Definitely nobody wants to change anything as long as it is flowing in, but there's money in such a good rate. But you have to do it because you need to ensure it for the future. And it's exactly where we are now entering the next stage with environmental issues, because again, these issues are not always providing immediate effect in profitability and efficiency. And this is a challenge. And I've lived it through, again, when we were forced to do it for certain reasons to expand the business, but we had the big obstacles and very expensive ones on the environmental protection side due to technicalities those days, and not initialized by us or even the present seller. And it wasn't a big problem to tackle with it in the eyesight of owners, because they saw it as an how to say, non-profitable money waste for the certain moment. But then it was done, and then it was right move apparently afterwards. But it is difficult. And again, to be successful in implementation of a new strategy and the business model presumes some degree of foresight and analysis of the political, economical, environmental, social, and technological framework of the particular market and broader, at least European scenery also. If you are internationally operating company or have international business, let's say, you have to be aware of what is going on in Europe. We are part of the European Union. And as it was said several times, we are now part of this Green Deal and social economy move, which is a fundamental from European perspective. So we have to accommodate ourselves, and we also have to be informed about it. And in beforehand, I have to admit that interchanging views and knowledge with some of our officials. I'm talking about Estonian officials in EU. I have to admit that all of them had a complaint, and it was a critical one. They were claiming that they do not see and do not feel very much interest of local, meaning in this particular case, Estonian businesses, towards the information about what is going on in EU and what are the perspectives in regulatory part and what are changes, what are policy issues which might have an impact on particular businesses or even industries. Even the organizations of enterprises, respective ones, haven't. So this is a very difficult thing, and it should be taken into account that we have to be aware of European changes, and Europe is actually in foreseeable 10-15 years greatly changing in all respects, but in those particular issues, environmental first of all, social as well, even more than ever before. This is a sole task of the top management of the company to be aware of all of it, and top management, executive management, must engage all other relevant parties in support of it. So top management has to be well informed, foreseeing, persistent in actions and ideas, convincing, because you have to convince everybody, all stakeholders involved, and at the same time reasonably flexible, which is a challenge by itself, because where is the borderline of this reasonable flexibility? It's very, very disputable, and sometimes it's very difficult to stay strict and fight for the ideas and strategies because other considerations might take over for other stakeholders or from our other stakeholders' perspective. So all I can say is that I have to wish everybody here, everybody, all of us, a great deal of this persistency, foresight, and reasonable flexibility in the future. Next slide, please. Thank you very much for your attention.
Thank you, Raivo, very much for this inspiring and kind of opening speech and all the insights that you shared with us. We have actually the questions, even though that we have not so much of time, but can you quickly answer the questions? So could you highlight any local, means Baltic, success stories in ESG where a company made a real turnaround in its practices? Do you have something in your mind?
Well, I definitely claim that it applies to several companies, and including 2 real estate companies in boards of directors I'm part of nowadays as well. Both, which is Ülemiste City one. Estonians know the place, probably others as well. It's the biggest real estate development, which is taking a sizable effect now on the economy. 5th largest city in Estonia by income from economical point of view, and it's entirely nowadays all the strategies based on the ESG logic entirely. Oh. And second one is a real estate company which is working in 3 Baltic capitals, which is now doing only projects which fits into this particular environmental related maximum grade. By definition, it's strategy. It's decided and it's implemented already. First things done already. So basically, yes, I am sure a lot of them, but I can't say exactly the same with everybody. And especially it's difficult to say it in infrastructure cases. Even they claim they have policies, they have money allocated, but scale is different and history background is different.
Thank you. And one more question quickly. How to overcome these paradoxes if majority of processes are outside of my power of influence?
True. It is a challenge. I know it personally. Yeah, you have to have an allies. And secondly, you have to understand what are those drivers and key players for those processes. So having ideas about the regulatory part, having ideas about who is doing what and who is responsible for what and how you can impact it, having your allies for that reason, both inside the organization and outside the organization. All you can do, because in majority cases, it's exactly what the executive management has to do. There is no other possibilities even. I suspect that in certain smaller size companies cases and different industries, it is possible. But in larger scale or middle scale companies case, no way you can be the person who will decide everything. Never, ever. It's always about decision making in coordination with other centers of this impact on the decision.
Thank you. Thank you, Raivo. So we have to move forward to our first panel, and I hope you will stay with us, and maybe there will be some other questions. So now we are moving to our first panel, ESG expectations of banks and investors. And to moderate this discussion, I would like to invite my colleague from Riga, Andris Grafs. Welcome, Andris.
Yes, thank you, Rytis, and hello for everybody. So yeah, ESG expectations of banks and investors is a topic to discuss now. And actually, what Rytis mentioned in the very beginning of this conference, that sustainability and ESG aspects, so there are ongoing discussion all around. And even I would dare to compare them as sustainability avalanche, where company owners, also board members, top management, all internal and external stakeholders, policymakers, and particularly financial sector, banks, asset managers, and also investors play a crucial role in this ESG journey. Valdis Dombrovskis, Executive Vice President of the Commission, just told that many companies still focus too much on short-term financial performance. And when there is significant rise of bank and investor interest in ESG issues, and we heard that EU regulatory agenda comes into play, it seems that every snowflake in this sustainability avalanche has its own role in ESG journey to achieve the common goals. Today, we have 4 professionals from the industry in this panel who will share their experience, insights, views, and obviously also ESG expectations. So let me introduce the panelists today. Anders Larsson, who is head of Baltic corporate banking from SEB Bank. Liza Jonson, who is CEO of Swedbank Robur and chair also for Swedish Investment Fund Association. Marco Francini, head of group office for the Baltic states, European Investment Bank. And Simonas, Gustainis, who is managing partner of Baltcap. So thank you all for joining our conference and panel discussion today. Before we start, I just want to remind and to encourage our audience to be engaged and ask questions via Slido tool. So I believe that you already know how to do it, and just to type BICG capital letters in Slido application and ask some questions to particular speakers today. So now let's start our discussion, and then actually I will invite all panelists to present your represented company approach to ESG, as well as to dig in a bit of focus points and insights in scorecard elements what are applied when you are taking investment or financing decisions. So let's start, Anders, with you. So what is SEB Bank? So the floor is yours.
Thank you, Andres. Let's see this avalanche and how it's affecting the financial industry. If you go to the next slide, please. I think it was a very good introduction today and what happened yesterday with the European Union, because the taxonomy, that is something that is putting kind of the pieces on the paper, so we know kind of something to hold on to. So legislation, that is the catalyst of very much what's happening, but it's so much more happening. We as private individuals, we are getting interested. What is it that we are buying? What are we consuming? How are we investing our money? We want to do it in a more sustainable way, right? And thereby we have the investor community that Liza is representing, that they are looking for more sustainable investments. And as a corporate, of course, you want to sell to these private individuals. You want to get this financing from the investor community. But it's also a big fight for talents out there. And I can tell you that when you're recruiting people these days, and really talented people, it's more about the values and how you report to the company that you're aligned with your values than exactly what you pay for it. And on top of this, there is a very quick technological development going on, and this is speeding up the whole transition. So we're getting more and more kind of an ecosystem that now is reinforcing itself. It's a change of mindset everywhere, and I think that's why we see this kind of awareness now being everywhere, and things are moving really, really fast. This can, of course, be a risk if you are on the more challenging businesses when it comes to sustainability, but it's also a lot of opportunities. So if you look on the next slide, we can see some of these opportunities, and we will hear more about that later today. You can actually find new markets, you can find new clients when you run things in a sustainable way. On top of that, you can actually save money just by reducing the amount of raw material. That is cutting the cost. That means that you can actually increase your return on capital. However, there is a lot of risk management into this because there are new regulations coming also for the corporates, not only for the banks, although we are loaded with it. And on top of that, you need to do your activities that are in line with your branding. Otherwise, the risk of greenwashing, that is something that might hit your brand. On the next slide, we can see the global market shares when it comes to green bonds. And usually I want SEB to be in the top. But actually, if you look at the name of the banks here, it's really big international banks. I'm pretty satisfied to be at number 7 in this list. And the reason why I show this league table is not to brag about what we are doing, but it is how does it come that SEB can be number 7 in this really global competition? Well, it was SEB once upon a time back in 2008 that invented the green bond. Together with the World Bank, we did the first green bond issue. And this is just an example of how you also in the financial industry, but being a first mover, you can take that advantage and really keep an international big market position. So what do we then do in the Baltics? On the next slide, we can dig more into this in the discussion. Happy to do that later on. But we have been assessing Baltic corporates now for several years, and we've used this based upon a framework that we have kind of designed specifically for the Baltics. What do we see as issues with the Baltic companies? And I can make Ritis in this case happy that it's actually quite much about governance when it comes to these topics. For example, we are talking with the companies, what type of CS policies do they have? How have they been implemented? Do they have corporate sustainability policy in very many areas, environmental policy and so on? And what is really focused now, that is the climate change, the environmental part. So what we're digging into now, that's what we can see on the next slide. The taxonomy framework has helped us a lot because now we are doing this assessment of different industries when it comes to the scope 1, 2, 3 emissions. And we can see for a road transportation company, it's the tailpipe emissions from the trucks. That's where you have the major impact. If you take a retail company, it's the stuff that you sell in the store, i.e. the supply chain. What's the CO2 impact from that? Meaning that you need to have a quite different framework for different industries. So we have some 30 different framework for different industries that we assess the companies. The good thing is that when we get this data, when we're doing this advisory together with our clients, we can then plot in the clients and the trajectory of the clients. Is it so that this client will be compliant with the Paris Agreement, with the European Union taxonomy going forward? Or is it so that this client will run into issues? So on the next slide, just doing a summary, a wrap up of what I talked about. There is a lot of opportunities for US corporates out there. It's also a lot of opportunities for us as banks and financial institutions in this market. However, if a corporate has a more challenging business from a sustainability perspective, it will be more tricky to get the financing needed in the future. And if you get it, it will definitely be more costlier. And we as a bank, we are here to support our clients in this transition to become more sustainable. Thank you.
Thank you, Anders, for your insights. So obviously, usually there's a question that every financial institution is making their own methodology, and if some companies are approaching SEB Bank and asking, so where can I dig for more information? So all these aspects what you are assessing. So what would be your answer to
well,
that?
the answer is we are actually doing advisory to our clients. So we are assessing this with our clients, and then we can compare a client together to other clients in the industry, international as well. So I think this is what we as banks need to bring to the clients to be able to give these insights and assess it. And you're right, there are different methodologies, but this will be aligned over time. But we are kind of in the starting phase of this, but happy to help all our clients with this.
Okay, thank you, Anders. So let's move to Liza. You have broad experience on ESG topics and how it's implemented in Scandinavian countries, and particularly Sweden. So please, the floor is yours.
Thank you very much, Andres. So I'm very happy to be here. It's a very important subject and something we've been working a long time with in Swedbank Robur. Sorry. So Swedbank Robur is Sweden's largest fund company, but we also have 3 asset management companies in Estonia, Latvia, and Lithuania. And together, we manage approximately 165 billion euros. And since recently, we also offer our funds in the Baltic markets. But as a large investor, we have a really important responsibility, but we also have the possibility to take a clear stance in issues that are important for our customers, for the investment, the companies, and for the society as a whole. And what we do see is that money do talk. It's a key factor in making the transition happen. So we have a very important role to play here. And this is not something that started now. We started working with these issues already back in the 80s. Back then, it was a big focus on the environment. But sustainability has evolved over time. And today, it's much more broader and encompass much more than the environmental issues, such as social and health issues, alignment to the 17 SDGs, and the topic of today, governance. And our work has evolved as well. It has evolved from an opt-out strategy to an opt-in, where we actually choose these companies with the long-term sustainable strategies. And I'll get back to that and what it means to us. But since 2017, we have a very clear strategy and a very clear vision. And that vision means that we want to be a world leader in sustainable value creation. But that means it's not about being the best or the number one, but it's taking our responsibility as a large investor to lead, support, drive, and inspire into a more sustainable development. So it's important that sustainability issues are a central part of the company's strategies in which we invest. And it's also a central part of our strategy. It's not a marketing tool. It's not something we put a sticker on our investments, but it's actually a central part of the investment philosophies of our mutual funds. And before I go into specifics about E, the S, and the G, I just want to emphasize that they are actually equally important. Today, we have a large initial focus on E as in climate, but in order to fix the climate issues, the S and the G are essential for that movement. And at Swedbank Robur, we have a policy on responsible investment. It covers all funds and all holdings. And that policy is the base. And our policies and all of our statements, they're publicly available on our website. And that's in line with being a leader. It's about sharing our experiences and views with others, because this is not a competition. But in order to make progress here, all the collaboration we can get is needed. So just a few comments on the E, the S, and the G. Regarding the E, environment, it's that we have written sustainability strategies for every single investment fund we have. It's a key part. We've also set very high and very ambitious climate targets for all of our mutual funds. So we want all of our fund capital that is managed to be placed carbon neutral by 2040. That's 10 years prior to the Paris Agenda. We also want our capital to be in line with the Paris Agreement's target of 1.5 degree warming by 2025. So we don't have much time left. And we have launched products in line with that. We've launched new funds that are in line with the Paris Agreement, where we have used the sustainable finance climate benchmark regulations that were set by the technical expert group to learn, but we're also here being very transparent on how we did it to inspire others to follow. We've also reduced our climate footprint in our equity funds by more than 50% from 2018 to now. But as Anders said, it could be the tip of the iceberg for some sectors, since we're currently only measuring scope 1 and scope 2. So you have to be very aware of the limitations of the metrics that we use, but that is not an excuse not to use the metrics. And we also reduced our exposure to fossil fuels almost completely. We had €1 billion exposed to fossil in 2018, and now we're down to 10 million euros. When it comes to the S, it has many important sub-issues like health, education, gender equality, human rights, and fair businesses. And as an example on how we work with these issues, we further defined our values here and what it means for us when we make an investment in a company. So we set 3 overall missions. We want to invest in businesses, and this is very important, and you can read all about this, that are good, clean, and fair. And based on these parameters, we also produce expectation papers on sectors where we as an investor can hand over to the companies and say, this is what we expect from you if we're to be a long-term investor in your company. And we also work a lot with gender equality, where we have increased the number of women representatives in the boards, in the nomination committees where we're represented. And then to the sort of the main topic of today, corporate governance, the G. And we work very ambitiously with the G, because we believe that this is where we can actually make an impact. This is where we can create value for our investors and for the companies. So it's a team effort. Our portfolio managers, they work closely with our corporate governance specialist and the sustainability analyst in order to influence the companies in which we invest to going towards a more sustainable directions. And last year, we participated and worked in 96 nomination committees, where we were able to place sustainability agenda on the board's agendas directly. We also conducted 948 company dialogues that has sustainability as one of the core items. And just to put that in a context, we invest in approximately 2,700 companies worldwide. So more than a third of the companies in which we invest, we had sustainability dialogues with last year's. And that's our task as a major owner, is to continuously make clear demands, support, and follow up on the companies in which we invest. And for this, collaboration is also key. It's about working cross companies, cross sectors, cross countries, because no one will single-handedly make the difference that is necessary. And for that purpose, we collaborate with many other investors in, for instance, Climate Action 100+, Net Zero Asset Managers, etc., etc. So it's important to handle this and front these issues now. Prior to me, you spoke about having to give up short-term value to make investments now that may not pay off. We don't see it as that. We see it as you need to be sustainable now. You have to have a very transparent and communicated strategy in order for us to be able to stay invested. We are long-term investors, but long-term is, you can put an equal mark between long-term and sustainable investments. We need the companies we invest in to be long-term, to be sustainable, because that's where we will see the customers, and that's also the companies that will attract the capital. When you look at it short-term, it's about risk mitigation. Definitely risk mitigation. It's here and now. And you as a company, you need to handle these issues. And it's also about how you communicate on the known concerns that you have in your company. So it's about transparency and reading up on the EU taxonomy and the new SFDR regulations, because these will become crucial for us as investors. Thank you.
Thank you, Liza. And I will go just to some questions from the audience. And actually, there are 2 similar questions. And when you're presenting, so is it just a story of large corporates, where these guidelines and expectations and details, these metrics that you mentioned are on agenda? Because the one question is, obviously, the large companies will be affected first. But when do you think it will reach also smaller businesses? And are there any specific regulation to forecast it? And similar question comes regarding financial incentives. So what will be presented from the financial institutions to motivate also small and medium enterprises to put this ESG on higher priority? So maybe you can comment this aspect.
Yeah, no, definitely. To put it shortly, when we look at the sustainability areas in a company, we make no difference whether it's a small company. We have exactly the same sustainability expectations on our funds that invest in our micro cap categories, small cap and large cap. And then, of course, we have much more data on the large cap from MSCI, Sustainalytics, and so forth. But that, yes, it does put a burden on the smaller companies, but that's where the governance area and the dialogue is so important, because that's where we get the data through dialogue with the companies. But you can't lean back and say the new regulation doesn't affect me because I don't have 500 people in my working for me. We're not going to make that difference. So all companies need to be prepared, and we will expect the companies to have a clear targets, climate strategy, clear sustainability strategy. We encourage all companies to commit to the science-based targets initiatives. So basically, it's for everybody, and that's the only way we will be able to stay invested.
Okay, thank you, Liza. So let's proceed to Marco Francini from European Investment Bank. So you are an important tool how to implement EU policy regarding sustainability. So Marco, please, the floor is yours.
Thank you very much, Andres, and thank you very much for having invited me to this conference. So I'm going to present what the EIB Group is, and subsequently I will talk about sustainable finance and why ESG is so important right now. Next slide. So the EIB, European Investment Bank, is the EU bank. Our shareholders are the 27 member states. We issue AAA bonds in the market and provide finance to 4 key areas: environment, innovation, SME, and infrastructure. The headquarters is located in Luxembourg, and last year we have opened the office for the Baltic state in Vilnius. Next slide, please. Our financing options are the typical from the banking sector. So we propose loans both to the public and private sector counterpart, guarantees and risk-sharing instrument to financial intermediary. We also participate to project finance or non-recourse finance, and then also with equity to funds, mainly with our daughter company, the European Investment Fund, and venture debt to innovative, fast-growing companies. Next slide, please. The EIB Group provides also technical and financial advisory services to improve the bankability of projects, as well as to share knowledge on best practices. Next slide. So we are the EU Climate Bank. In 2007, we have issued the first climate awareness bond. And as of today, we are the largest issuer of green bonds and one of the largest lenders to the water sector. Last month, we have signed the first project in the water sector in Lithuania with Vilnius Water. How did we become the leader in sustainable finance? So first, we are a not-profit organization and a policy-driven bank. The project that we finance and especially that finance that have a positive impact on the environment, but also have generate social improvement, have always been in our priorities. Therefore, we expect that ESG will become priorities in all the sectors, not only in the financial sector, but also in the industrial sector. Second, the project that we finance must be technically, financially, and economically viable. This means that in addition to the creditworthiness of the counterpart, we undertake an environmental, social, and economic due diligence to ensure that the project is in line with EIB environmental and social standards. This assessment is done by our project department. It is composed of engineers and economists that are experts in the various sectors of the economy. Therefore, the EIB has been integrating ESG requirements into all its operations since at least the last 2 decades. We think that environmental and social due diligence enables promoters to identify and manage risk and support the integration of this aspect into their decision-making. We calculate the carbon footprint since 2007, and we publish it sustainability and carbon footprint every year. And this is an example you can download it from our website. In summary, we think that in the future, everybody will need to build a framework to consider environmental social aspect in their activities and to report it transparently. Third aspect, in our 60th anniversary, our motto was improve lives together. Improve lives is because we aim at providing an added value to the society for each project we finance. And together is also very important because we will not be able to do it without our clients that are actually implementing the project we finance. Therefore, the message I want to give is that we need to take the path towards sustainability altogether, engaging more with our clients, the civil society, and all stakeholders. Next slide, please. So last year, so in end of 2019, in the context of the revision of the energy lending policy, the board of the EIB took an historic decision to stop financing fossil fuel-based projects by the end of 2021. In addition, we target to increase the share of our climate action project to 50% by 2025, as at the moment we are already at 37%. Finally, we are aligning our activity to the Paris Agreement by the end of 2021, including a review of our environmental and social standard with public consultation expected this summer. Next slide, please. This is, in a nutshell, our activities for 2020 in terms of climate action financing. So you can see 24.2 billion, which is 37% of the project we did last year. As you can see, the largest part is in the energy sector. As you can see, renewable energy include solar energy, wind energy, geothermal, and energy efficiency. It's a very big number. 70% is related to renovation of existing building. Of course, lower carbon transport is also a very important aspect that we take into account. And of course, this is all the project that we expect to increase our lending in the coming years. Thank you.
Yes, thank you, Marco, for the insights of your practices. So I will just ask also one question from the audience regarding, are there any ESG related criteria that you apply differently from one industry to other where you are in investing and financing? Or is it just one pool of ESG approach that are applied to everybody, every single industry, or are there any specific things? Yeah.
Well, okay. So regarding, let's say, social and governance, of course, let's say these aspects are the same for everybody in the sense that our project need to be socially responsible. Regarding environment, our environmental and social standard, I have to say that they rely on EU regulation. So the first thing that we check is that the project we finance is actually in line with environmental national environmental legislation, and also, of course, that is also in line with EU regulation. In terms of carbon footprint, this is what I was, saying before. We do this for every industry we do. So the environmental part, and we expect that the carbon footprint is calculated, in every sector of the economy where we are. But of course, there are different sectors with different aspects. For example, renewable energy is different from the industrial sector, or energy efficiency is different from the banking sector. So of course, we would need to go and check for each of the sector, which are the specificities of each of the sector, and where actually, and I can tell you that from now on, it will be different from, let's say, high emitting industry to low emitting industry. So we will have, of course, a more in-depth look to, and be careful that we will need in the future that high emitting industry will have a commitment also to reduce their carbon footprint.
Thank you, Marco, for the answer. And let's go to Simonas. So actually, you have a privilege today just to share the Baltcap experience, but also so you have a possibility to comment what you heard already from your colleagues in a panel. So Simonas, the floor is yours.
Thank you very much. Very happy to be here and share our perspective and experience. There is a bit of a sense that there is a lot of strategy and high-level discussion, and I hope I will be able to add some dirty hands perspective here also. So to start with, we at Baltcap consider ourselves pioneers of responsible investing in the region. We were launched with the help of EBRD and some high-profile Scandinavian investors in '95. And have been focusing on the theme for more than 25 years. And since then, we raised some 650 million euros of capital, made 80 investments, and are happy to employ some 6,000 people working in 33 portfolio companies currently. Next slide, please. So, as a mostly control-seeking investor, we are exposed to quite a bit of practical implementation related to ESG, as well as the related requirements imposed on us by our investors. Incidentally, all of the panel seems to be our investors, including EIB, SEB, and Swedbank. So we're very happy with that too. So in a way, we are kind of a tactical delivery vehicle for this relatively high-level goals that are being set around the globe now. Next slide, please. So we are among the first in the wider region to have signed up to UN Principles of Responsible Investing and have been working with the promotion of these ideas ever since. We're reporting on the ESG to our stakeholders already for 10 years. Recently, we have gone a level deeper, having initiated ESG materiality assessment, CO2 measurement, and reinforced our commitment to sustainability through improvement of our own internal processes. Next slide, please. So from our perspective, currently, ESG is really a journey as opposed to a destination. And in terms of my mindset, the scene can be rather chaotic and it may be even overly informative. Everybody has a view, but there doesn't seem to be a true framework yet. But it's probably healthy to split up that journey into 3 stages, as we do for ourselves. First is reporting, second is sort of ESG risk management, and the third part is the sort of the do-good part, or impact investing, as it is probably more commonly called. And our ambition is to be a full impact investor with all of our funds that we manage. And for all practical purposes, in our infrastructure fund, we consider that we are an impact investor. And then we feel relatively advanced with the first and second step of the journey with the rest of our funds. Next slide, please. Talking a bit more concretely, we approach each portfolio company individually and seek to affect impact on E and S through G, if we can use the letters here. And because we are a control investor, we are able to, let's say, to create that change through our will, so to say. And the areas that we focus on mostly are employees, environment, consumers, and community. Before we invest, we do a relevant environmental and social due diligence exercise that fleshes out the main solvable issues and opportunities. We integrate the conclusion of that due diligence into our business plan and follow up the implementation of the business plan during the annual reviews with the company CEOs and our own internal Baltcap annual reviews. And then part of the compensation of the investment team is linked to the performance on these 4 parameters, as is increasingly part of the motivational package of the management of the companies that we are investors in. Next slide, please. So in terms of practical examples, I attach here some illustrations. Probably will not go through them in a too lengthy manner. This is probably just for reference, but maybe to just briefly note that, for example, in our energy investments in our infrastructure fund, we are focusing on greenhouse gases saving, because in there we are doing primarily greenfield investments. It is relatively easy to do those GHG saving calculations. Next slide, please. In other businesses that we are investors, which are let's say more soft, one of the examples could be a beauty product distribution business where we focus more on things like packaging, sustainable supply chains. In our meat processing business that we have in Lithuania, as a third example, we focus on renewable energy generation and bio-waste treatment as themes. Next slide, please. So you will see that there does not feel as if there is a finished framework of operation with regards to ESG in our firm. But for us, we believe it is a right way to approach this topic, where you deal with concrete matters as part of your business plan, as opposed to just broad KPIs that may be imposed on you. So to sum up this brief intro, first, ESG or sustainability is a mindset, and we seek that mindset in our investee companies and support and promote it. Second, it is, I think, important to understand that sustainability is a journey. And finally, in planning your own ESG integration, to the listeners, I'm saying this, it is important to set relevant and even more importantly, honest KPIs and stick with them until you achieve those relevant goals. So that's it. I will pass the baton now. Thank you.
Yes, thank you, Simonas, and also for indicating some examples where through your investments you reach some impacts, because there was also such kind of question from the audience. But one question is particularly interesting, and I want to ask it to you. So as a Friedman argue, profit is everything, right? And speaking sustainability, does financial sustainability always comes before the ESG, or is ESG is like a license to operate? So financial performance, objectives, and strengths, and ESG aspects. So what would be your answer? How to deal with these two dimensions?
I think it's a fake trade-off. We look at it from investment returns perspective, and it is by now, I think, obvious that dealing with ESG matters properly increases the multiple at which you can sell your profit. And therefore, it just makes sense to work with sustainable matters. And if there is a reduction, supposedly, of profit, it is more than compensated by the multiple that you are getting when you're selling the business.
Okay. Andres, if I may, there was a meta study done by Oxford University. They looked on 200 different pieces of research and proving exactly what Simonas is saying, that it's a direct correlation between if you run a sustainable business and how the business is valued. And I can say also from the banking perspective, for us, then we are working with risk then, right? So it's about to understand that this business is future-proof. So if this business earns a lot of money this year, but in 4 years' time, they risk of going out of business. And that's why we're doing these kind of forward-looking trajectories. Then we don't want to be in, we don't dare to finance that business. The risk is too high. So this is kind of long-term versus short-term. And I think that long-term, that's where you need to be.
Yeah. Thank you, Anders, for your comment. And oh my God, the time is flying so fast. And as the last round of the questions, and maybe I would encourage you to ask to answer to the question. A lot of companies are saying, okay, anyway, banks will finance my company, even if I'm not ESG compliant, because it's their business and they need to put money somewhere. What you would answer to such a company? So are there better financing options for ESG compliant business, or will be some red flags showing up that there will be no financing, no investing? So maybe last round of the answers regarding those businesses who are still thinking that, well, it's really, really far away and it's not about myself. So Liza, maybe you want to start.
Yeah, I can start. I mean, first of all, as we have all concluded, there's not one single metric. I mean, every strategy needs to find the metrics that are important for that sector. But looking at it, if a company would say that to me, I will, and I have to walk away, because it's not, well, it is about that company, but I have more than 4 million customers in my funds, and they expect me to make sure that they earn money in a sustainable way. So I can't have that kind of reputational risks in my portfolio, because then my customers will walk away and find another asset manager. So regardless, and what the company says, and yes, they might make a profit now, we want to be and find long-term. We don't trade, we're too large for that. We find companies that are solid and that have a sustainable strategy where we want to remain owners. So yeah, I think that company will have problem to find financing, and they will not have a long and bright future ahead of them, to put it shortly. But it's about the responsibility and what our customers expect from us. They expect from us to know, and that's a big generation shift as well. The younger customers that invest in our funds, they want to know how their money is generated, and whether it's in environmental and resources here, or whether it's securing the supply chain in that business, or whether it's an IT company where we need to look at cybersecurity and employment rights. So it's different, but it's always there as in part of the dialogue with the company.
Okay, thank you, Liza. Marco, maybe your reflection to the businesses who think that it's far away.
Yes, for us, I mean, we in our energy lending policy, we already said that we're not going to finance fossil fuel by 2021 already, and I can tell you that climate financing, climate action, environmental sustainability is on our top priority. So we really believe that we are going to finance projects where there is a high environmental and social component, and with a counterpart that are heavily committed with a path towards sustainability. It would be for sure for us, it would be a priority, and probably from next year they will also, because of our alignment with the Paris Agreement, these are 6 pillars that we have agreed with the other MDB. So not only they will need to be eligible, but they also need to be aligned with the Paris Agreement. So definitely, it's we think that ESG will become on the top of the priority and the top of the agenda of every company and every bank we would deal with.
Okay, thank you, Marco. Simonas, what would be your reflection?
Given that we are a control-seeking investor, I'm looking at this more as an opportunity. Let's say the lack of relevant, let's say, ESG mindset within the company. It's something that we can come in and create or reinforce that is there and create value out of it. So that would probably be my reflection on this. Of course, there are sectors that we are not touching, but just, let's say, in terms of negative selection, things like tobacco or gun production and similar. But in terms of economy in general, I sense that if there is a possibility for positive change, this is our function.
Indeed. Anders.
Yep. There is a number of industries that we are not financing because we have policies when it comes to this. And that doesn't matter to answer your earlier question, the size of the industry, it can also be kind of a small company that doesn't fit into our framework. Then we cannot work with them. And unfortunately, there are a little bit too many of these businesses in the Baltics. And you can actually see, but it seems that still many of these businesses, they get financing from other places. Although I think we have an interesting situation that was discussed in Estonia regarding to build another oil shale plant. And I think it has nothing to do with the credit risk, but banks are not really willing to finance that type of expansion. And for us, it's very easy. It's just to read our fossil fuel policy. We are not allowed to support expansion in unconventional oil. So then that's kind of a board decision. So I think that this is changing a lot. And another aspect as well is that now when we as banks need to report much more with the new directives coming in, it will also be that in the future, the European Banking Authority, they will ask us to allocate capital in a different way. So if it's a less sustainable business, that will use more capital, meaning that the banks need to charge much more on that one as well. So it will hit these companies in both ways. So don't just sit and wait. That is my strong advice if you're in that situation. This will not go away.
Yes, thanks, Anders. So actually, don't sit and wait, and this will not disappear. So this is one of my closing remarks out of the panel. What I would like to a bit to sum up. So on the one hand, the sustainable business models generate growth and opportunities, and really the shift in mindset is an important element in the ESG and sustainability journey. So we also discussed that access to finance for non-sustainable businesses will decrease, or it will be not no-go at all. What I also heard today is that all of you are open to help businesses, also large and smaller and medium-sized enterprises, just to support this transaction through the lead, support, and inspiring activities. What's also clear is that still there are various standards and approaches in the market, and framework of ESG is not finished yet, but still banks and investors are approving the policies that can really be beneficial guide for businesses in ESG journey, and to understand what are these metrics, what are these indicators, what banks and investors are analyzing. I like several times what mentioned during this panel that there is no trade-off between this impact ESG and profits. So both are expected from companies, and you cannot be not ESG compliant to access finance. And it's not a marketing tool, and it's not a marketing tool for businesses, and it's not also a marketing tool for banks and investors when we are discussing the ESG topic. It obviously will become priority in all sectors, not only in the financial sectors. And finally, ESG, all E and S and G letter are equally important. And if the governance is missing, so we cannot expect that E and S aspects will be implemented accordingly. So thank you again for participating in a panel discussion. So today we had Anders Larsson, who is head of Baltic corporate banking at SEB Bank, Liza Jonson, CEO of Swedbank Robur, Marco Francini, head of group office for the Baltic states at European Investment Bank, and Simonas Gustainis, who is managing partner of Baltcap. So thank you from the bottom of the heart for joining us today and sharing your insights today. And now I'm giving a steering wheel back to Rytis.
Thank you, Andres, and all the great panelists. It was really very interesting and very valuable discussion. And we see that the questions were still coming. So this is a really important topic. Now at our second panel, my colleague from Tallinn, Eric Sakov, together with the prominent practitioners, will discuss and answer your questions about how to integrate ESG in the company strategy and in the business model. So, Eric, welcome.
Yes, hello everyone. My name is Eric. I'm from BICG Estonia. Happy to be with you here. Well, EU tells us that we should do it, and bankers and investors say that if you don't do this, you will not get any money or investment, and your business is going to lag, and this is scary. What to do? So the only thing is start doing it, go practical. But Raivo told us that this is not quick, it's not easy, it's not cheap. So, well, everyone wants to know how non-quick it is, how non-easy it is, and how expensive it is. And finally, all business units are designed to fight for profit and growth. And now it's changing. It's something else as well. Well, what is it? And how can I do this? Can I learn somewhere? Is there a school for this? Is there any help available? And most importantly, how to overcome all hesitations. To get answers to this and to go practical, we asked Kathrine Löfberg, with a very famous family name, as a sixth generation entrepreneur. Mihkel Tammo, who is a second generation entrepreneur from Estonia, and also Thomas Tiblat from Nasdaq Stockholm, to share the experience and to discuss all these questions which are deep in our minds and we are hesitating how to overcome this. First of all, can we please listen to a presentation of Kathrine?
Yes. Hello, nice to be here, and I would like to present a bit about our business first of all, and to just give you some background, and then some examples on how we are working on these issues and always have. My name is Kathrine Löfberg. Then I'm the chair of the board of the coffee business, Löfbergs. And I belong to the fourth generation. It was my great-grandfather who founded the company in 1906. Yes, you can change the slide. First, some information about the business. As I said, it's a 100% family-owned coffee company, founded in 1906. We are selling our products in 10 markets with 6 different brands, where Löfbergs is our main brand. We are around 340 employees, and our turnover is 1.6 billion. We source our coffee from 40,000 farmers in 25 countries. And I will come back to that a little bit later on, because that's an important part for our business in our value chain. We produce equivalent of 10 million cups of coffee each day. So it's quite a lot. Next slide, please. Yes, we have developed throughout the years from being a very local Swedish company to be an international business. And this has, of course, something that we are aiming to continue to do. You can change the slide, please. And I also want to mention our business in the Baltics, so that you have that information. You probably know we have been selling our coffee in the 3 countries for a long time, but we actually acquired a coffee roastery in Latvia in 2010. It was they started coffee roasting in 1993 already, and it's the biggest in the Baltic states, the biggest coffee roastery. We have 40 employees there, and of course we sell the coffee in and have affiliates in Estonia and Lithuania, but also to other surrounding countries. And here we produce quite a lot of coffee as well, great coffee. So next slide, please. Well, here, when it comes to sustainability, we have worked with this in our whole, throughout the whole history, one could say, because we've always been concerned about the responsibility for the environment and the people around us. And we also have been thinking about that all the things that we do today have a consequence in the future. So we have it very very strongly in our values. But this is our value chain, and I think it's an important part of this, how you should do this, because here you can look at your own value chain, your own business. And when it comes to us then, of course, coffee farming has where it's the biggest impact on both the environment. It has also challenges when it comes to social issues. So here we put in a lot of effort and focus a lot on this. Examples are that we buy certified coffees source our coffee directly. Then we travel a lot. We have the code of conduct. We are working also with different development projects in order for us to strengthen and empower the coffee farmers and their situation and their livelihoods. Of course, working with transports, working a lot in our own processing, like with energy savings, packaging material, waste, etc. So, and also distribution out to our consumers, customers, and of course work also with consumption, kind of ties this together then with this involvement and engagement in the local society where we are located. So this is very important to look at the value chain. So as you can imagine, there are many, many examples in these different areas. I will not go into all of them. Please ask questions if you have any later on. Yes, next slide, please. This is one concrete example. When we were about to build a new part of a new roastery, actually, for whole beans, it's started a couple of years ago, and it will be finalized very soon. And it's a record investment for us, but it has a great sustainability focus in everything here. Of course, we, as I said, I mean, we still source the green coffee, the raw coffee from sustainably certified farms. We also use green energy sources. We have worked a lot on packaging, and trying to be ahead here when it comes to packaging material. This is bio-based, it's going to be bio-based. It has also, when it comes to the building, it has a certification for environmental, and it has a certification called silver, is the category. And here it takes in consideration not only energy savings and so on, but also the working environment for the employees. So here is an example of that it's really integrated in every part, not only as a separate project or a separate thing, but it's really integrated everywhere. Yes, next slide, please. And why are we doing this? As I mentioned, it's part of our DNA and of our values. We've had this since the beginning of the 1900s. It makes us also to secure the supply of great coffee, not only now in the near future, but also in the very long perspective, if we are concerned about this and working on these issues. It reduces our costs, as was mentioned beforehand. Of course, you can save a lot of costs if you use less resources, if you use less energy and so on. It can also increase our revenues. I mean, this is making our business more attractive. We have reached much more customers. We can really increase the view on the strengthening our brand, but also that our customers and consumers are today, as was also mentioned before, demanding really that the companies take responsibilities. So we have really gained good businesses from this. And how to do this, just very short few examples of this, is to look at your own value chain. For us, it's from bean to cup, as I mentioned, but look at your own value chain and focus where is the greatest, where do you have the biggest impact, and where can you make the biggest change just by, and also have clear goals, that you start measuring things, and that you have clear goals and being very transparent. I think it's very important to say that this is this is something we have done, but this is parts that we are working on and that we want to reach these goals, to be very transparent, because it's a journey, like someone said, and it takes efforts here. But I think it's in the long run, it's really a positive thing, and it's if you don't do this, it's a very great risk, I would say. So it's not a question on if you should do it, work on these issues, but how you do it, and you should do it in your own way, looking at your own business. You can read a little bit more in our sustainability report. So you can take the next slide. So that was my presentation. Thank you.
Yeah, thank you very much, Kathrine. To be practical, can you please explain how you do guarantee, for example, the legitimacy of sustainability of your certified farms? How it is organized and how tough it is to perform?
Yes, I mean, certification in itself is a great tool, because there you have someone else also controlling, not only the company saying that this is sustainable. So it's an external part really controlling things. But for us, it's very important also to travel a lot and have a very close relationship and a long-term relationship with the ones that supplies the coffee. So we travel a lot. We have this code of conduct. We have control, our own control. But I think with certification, customer and consumer could also be very secure that someone else is also controlling this. And of course, things happen that someone breaks these guidelines and so on. But I think that it's important then to be very strict that this needs to be changed, or otherwise you lose the certification. So I think it's a benefit to use these external controls for us.
Thank you. But to peek into your boardroom, what was the most difficult ESG-related step that you made? And how long was the discussion, and how big were the hesitations?
I think there are many examples throughout the history when it comes to this, because this is something that is very, I think it's very important that it's something that comes from the owner side, that it's also in the boardroom discussed, and also in the top management, so that it's not a separate projects that could, be ended at one point. I think the biggest discussions, of course, is when it's big investments that needs to be done, because then you also have to consider these different aspects. You need to consider the environmental sustainability, the social sustainability, and the financial sustainability. I mean, these three needs to be a balance of, so that it's also sustainable, financially sustainable. So those discussions, I think, in general, have been, of course, good. But it's very good to have these discussions, and you get different perspectives.
Thank you very much, Tack. Now let's listen to Mihkel, Tammo, please.
Greetings to everyone also from me. I will try to follow you through my journey of sustainability in 5 to 7 minutes or so. It will be a very fast-paced helicopter ride, so hang on. And I would like to speak my experiences through 2 examples that I have. First is this company S-Tank, and next slide, please. I started my journey there as a CEO as a 27-year-old back in 2015. So this was about 5-year journey. Next slide, please. These 2 slides are here to illustrate what we deal with on a daily basis. We build the process equipment. And yeah, this slide illustrates where our journey began, looking at ESG, sustainability, CSR, however we want to call it, principles, and bring it to our daily lives. When I took over the company, it had made its first loss year in its 24 years of existence. So some changes were totally up on the table, and I took us to the direction of sustainability. And this actually started the 5-year journey that I will mention you about. Next slide, please. We divided our strategy into 3 different pillars or categories. First was our own direct impact. You can see some of the pictures. We started to consume green energy, electrification, reduction of impact of the different inputs we used also in our factory or processes. The second pillar was probably the most important. We looked at our product and service, and we started to enter new sustainability-oriented industrial markets that totally lifted our profit margins, and we took new approach to way of doing business. We started thinking more circularly and kind of adapting this into our offering. And when I started, we were a subcontracting plant, but when I ended, we had an R&D department and we're developing our own products intended towards sustainable offering. So these were the changes we made at our products and services. And finally, we had the third pillar in our sustainability strategy called community. On the bottom right, you see how we built the village court alongside with locals where we are located. And I took a role as a kind of topic leader in Estonia in the field, because we were ahead of the time. Back in 2016, it was not a popular topic yet at our domestic conferences. So I started to speak of the topic and trying to push it ahead. Next slide, please. So what we got out of it, very brief kind of points where we ended up 5 years later when I left the company for my new mission. We were selling out man hours, 150,000 man hours every year. And by the time I exited as a CEO, the hourly rate was around 60% higher than when I started. And obviously, it's not only because of the sustainability work, but it's mainly because of it, because our clients were the biggest industrial companies in the world. And at the beginning, it was maybe a theory, but later it was already in practice to pay more for sustainable services and products. Also, not less important, maybe even more important, is increase in work engagement. As we took the surveys with our team, we ended up at an average of 3.85 out of 4 points in our work engagement results for the year 2020. And this was achieved mainly because of the sustainability work. I wouldn't say that this is even a gram less important than the rise in our incomes, because people want to belong to something bigger when they go to work. They want to have autonomy and they want to develop, and this is what this strategy offered us as a company. We got more efficient also in our processes as they became more environmental friendly. We started to view our business model as circular, as I mentioned before, and also some external notifications that we earned Environmental Management System of the Year Company Award in Estonia, which normally was given out to small eco companies, not industrial manufacturing companies. And also at the European Union Green Business Contest, we became nominees as a finalist for medium and large-sized companies. So these are some notifications. Next slide, please. But along the way, what I noticed was that if you do this change as a one company, then you can affect your employees, their families, a little bit, your suppliers through code of conducts and these kind of things, also working with the clients, and a little bit of community, but it's still limited impact. And when you look at Estonia, then I wanted this also to change and become like a more normal environment where all the companies deal with their business making. And this is the second chapter of my journey of sustainability. It's about Green Tiger. In '96, well, let me take a step back. In Estonians, we take pride in two things. First thing is Arvo Pärt, who is our classic music composer and is well known in the world. And the second thing is that we are kind of known as IT government or our IT systems. Back in '96, we had this project called Tiger Leap started that is mainly responsible of the fact that we are known as this IT country in the world today. So Green Tiger takes inspiration from that initiative. Only we want to repeat that in a second field now in sustainability. We want to unite different sectors in Estonia. Next slide, please, on the road of sustainability. And our mission is to create and implement nature-friendly practices in all sectors. We work with individuals, we work with companies, and we work with non-profits, and we work with government. So through 4 different strategies, we kind of gather the impact that we want to sum up and then to change the whole society of our little country. That's what we are dealing with right now. Next slide, please. And if we speak of ESG strategy and companies, then what we have done is we have founded kind of union or representative body for all the companies that are considering themselves sustainable, who are already leaders, but also those who want to, have found motivation and want to become leaders in that field. And we started that 3 months ago. Now we have, these are 25 founding members, and now we have more than 50 members. So it has been a very fast-paced process. But we have this kind of metric in our mind that 1,000 biggest companies in Estonia make 90% of our economy. And we look to attract as big proportion of those big companies in phase 1 as possible, so that it would become new normality for a whole country of ours. Next slide, please. And the way we are doing it is, this is a formal education program for 1 year, and companies come into it, and a year later they learn how to be a sustainable company. All those strategies that were also mentioned in Löfbergs that are similar in Estank, it's a new know-how they adapt. And then they become inspiration to the others. So it's part of that formal helping everyone to move ahead. For example, this picture is from our first flight that is graduating right now, and it features our national police department from Nasdaq, LHV Bank, which is most valuable company in Estonia at the moment. So a lot of big players, our national broadcasting television channels, and all the others who want to be an example and help engage other companies in Estonia as well. Next slide, please. And to sum it up, then we believe that sustainability is not only the right thing to do, which is the base of it, but it is also a competitive advantage. It's a competitive advantage for a company, for a country, for a region, and I think Europe has also gotten it, because Europe is also trying to make this push in the global field to make sustainability a European competitive advantage in big picture. So for that, you see on this picture, we have a mayor of Tallinn, we have a head of police department, CEO of Port of Tallinn, and lead figure of our biggest energy company on this picture. So what we are trying to achieve on a larger scale right now in Estonia is that it becomes our kind of advantage as a country, and it helps us, develop our own economy, to be honest. Yeah, I think this was the last slide. So this was a really quick tour through my experiences on the path of sustainability from one company to a bigger initiative, and I see that the movement is and the trends and everything are supporting. So I recommend that others also step on the board. Thank you.
Thank you, Mihkel. What about the Latvian and Lithuanian companies? Can they join Green Tiger to get this education and knowledge and this good feeling of being a good member of a society?
Well, our preparation for now has been directed, domestically, but this is a question that has been coming up for many times already. So I encourage everyone to take a contact, and we can discuss the matters. Obviously, we have grown out of World Cleanup Day, which is the biggest social initiative ever started from Estonia. At the peak, there was 80 countries and 18 million people cleaning world thanks to this initiative. So we have ambition to be bigger than Estonia. So for sure, we are interested to speak with others as well.
Yes, one more question. Just looking at the current members, they all look like well-doing and prosperous companies. What would be a suggestion, for a company who is fighting for the survival during this crisis, what we have right now? What would be a suggestion to the business on the focus to ESG matters?
Mm-hmm. Well, we look at it in two stages. At stage one, we want to gather impact. So that's why we have gathered large corporate companies in Estonian terms. But stage two is obviously, this is not an elite green turn. This is meant for everyone. Then in the step two, we are looking to provide materials for also startup scenery, smaller companies, etc., who also want to be part of that. So, well, you asked a very difficult question, but how should they focus? I still think the main point that I would like to bring out is even if you're at a tough spot, you should bring this ESG metrics into your strategic planning. Because if you don't do that, then if you look at the long term, then you're in a really great danger. So I would start that everyone, leadership needs to adapt ESG principles into their planning activities. Because the trends and the regulations and everything that are falling down, business making in the future will be made really difficult without considering this.
Thank you, Mihkel. And now let's listen to a presentation by Thomas Tiblat, please.
Thank you very much, and thanks for having me here. First of all, I must say, really interesting presentations by Kathrine and Mihkel. Really interesting and very impressive, I must say. So I'm from Nasdaq, and I would like to give a slightly different perspective from a marketplace and the exchanges perspective with our position between the investor and the issuer and the corporate. I would like to also discuss a little bit about our role in the ESG space, and also end up with some practical aspects. So let me share my slides here. So first of all, I would like to just very briefly just describe Nasdaq. You probably know that we operate the exchanges in Baltics, but we are quite a broad group with different business areas, where the operating the exchanges is one part. But we have a broad and very global group with a net revenue of $2.9 billion. We have 4 different business areas, and that is the market technology side, which is actually where we provide technology to exchanges, to clearinghouses, and to banks and brokers and other participants in the market. We have a large business in terms of what we call investment intelligence, and that is a lot about data. It's about index and analytics. And then we also have, which more goes into the role as an stock exchange. We have one business area which we call the corporate platforms, where we support our corporates, and that is of course the listing side, but also different tools, etc. And I will come back to that later on in the presentation. And lastly, the market services, and that's where we, for instance, the exchanges and the market and the trading resides. So there we operate a number of exchanges in US, and also we operate the Nordic exchanges and the Baltic exchanges. We have equity exchange, we have derivatives, and also fixed income. So that's a very short on Nasdaq as a group. In terms of the ESG and the sustainability work, I just want to start to steal a quote from the CEO of Vattenfall, which I think is very wise. It's like, it's not about setting a strategy for sustainability, it's about setting a sustainable business strategy. I think that is really key, that this is the work with the sustainability area and the ESG is for the long term, and to have a robust business model that works in the longer run. I also would like to highlight that with the ESG work, it's not only about the risks. It's a really good way to find opportunities in the market and for the corporates. If you start to work with this and put a sustainable business strategy in place, there will be a range of different opportunities and also possibility for a prosperous future for the corporates. Secondly, what I think is really important in the market and in what's happening right now is the financial rationale that has been so evident during the last few years here, and the fiduciary duty among investors. And I think we heard that also from the previous presentations in the other panel, that actually it's not about compliance, it's not about just being a good citizen from an investor's side, so to say, but it's actually about performance and a good result in the end. So we can see that in various examples with good performance in ESG-linked indices, for instance. We had a good example during the pandemic crisis where the corporate bond market, the sustainable bond market, was much more stable compared to the normal bonds, so to say. So you start to have these, actually the financial rationale into going into these investments. And then what we also have heard a few times from the exchange, we also strongly believe that working with the sustainability, ensuring that you have a sustainable business strategy is key to have the long-term access to capital and have a long-term access to cost-efficient capital as well. So I think that is really, really important. So from our perspective as operating the stock exchange, our role as we see it is primarily these four. One is what we have heard previously about the ESG journey among the corporates. And that is exactly what we would like to support the corporates in this journey, because it's going to be a journey that takes time and that will develop over time. And once again, I think that is to ensure the access to capital. And of course, that is in our DNA, that we want to support the corporates and the capital allocation to corporates and risk capital in that sense. So that is one key component of our role. Secondly is about the transparency around ESG. And here we see a great need to improve the transparency, improve the access of data, improve the different comparability of data, etc., and also tools for data in order to improve the transparency in the market and thereby have a possibility for investors to make more informed decisions, etc., into their investment process. Thirdly, of course, we see our role also to provide markets and instruments and products that fulfill the ESG needs among investors and other parties in the market. And that could be everything from ESG profiled index futures. It could be more commodity-related instruments like electricity certificates or carbons or these kind of products as well. And of course, sustainable bond listing, where corporates can raise capital through a sustainable bond market. And lastly, we also see our role to facilitate the dialogue between the investors and the issuers to drive this process forward and link the two groups together to ensure that we get the right data out there, the right information, etc., and thereby improve the market. I also want to show a quite an interesting graph, I think, that gives a good illustration about the forces that we can foresee in the market due to the ESG or sustainability aspect. This is a graph, and it also actually ties into what Anders said in the previous panel about the banking lending. It's a graph I stole from Oliver Wyman, their analysis, which summarizes quite well the focus in the lending market. This graph describes the gap between the lending, the banks in Europe, both the European banks and foreign banks, but the corporate lending they provide. And almost all this lending, these banks have committed to the ambition of the Paris alignment and those goals. So this is what they're going to strive for. And as we can see on the right-hand bar is the corporates and the European corporates, how many that actually have committed to these Paris aligned targets. And obviously we have a huge gap here that has to be closed in one or another way. And of course, we hope that more and more corporates will adopt to these goals, of course. But we can also most likely see some effect on the pricing on sustainable funding or sustainable assets to drive that market even further. Some last words on the practical aspects that I think it's really wise for or important for the corporates to think about when in their ESG journey, and it's also alludes quite a bit to what Kathrine said previously. But one is of course to see this as a journey and take it as a stepwise approach. It is a lot. It's a very broad area. Probably you as a corporate can be overwhelmed of all different frameworks and all different reporting standards, etc. But I think it's very important, like Kathrine's also said, that focus on your key areas, set the strategy, and then roll it out in a stepwise approach. Secondly, the materiality aspect. I think it's has to be also an approach where you assess the materiality in your footprints and what is the most important areas for you to focus on. And also that I think maybe this goes a little bit against what Liza from Robur said, but some adaptation in terms of SMEs versus the large companies, I think we have to accept, but it has to start also for the SMEs and start to develop and evolve over time. So the essence there is that it's very important to start to work on this and start to have this into your organization in your decision-making processes. Thirdly, transparency. I think that is extremely important to gain both for the investors to get hold of the important data, but also in order for the corporates to gain trust among the investors that they do disclose. You do disclose as much information you can, and also over time, if you start to measure you also will manage this aspect within the ESG area. And lastly, from our perspective, we, as I said, one of our key roles is to support the corporates. Just as a piece of advice, we have developed what we call an Nasdaq ESG reporting guide, which is a quite hands-on tool for corporates to explain what and why to report on different metrics and different areas linked to the vast range of different frameworks, etc. It's within the E, the S, and the G area, and a quite useful tool in that sense for corporates to utilize. And we also have a what we call the ESG data portal, a portal for corporates to upload their ESG data. We started that like 2.5 years ago. Now I think we have almost 600 corporates, listed corporates, displaying and uploading data into this, primarily the Nordics, but also some of the Baltic companies doing that. So most welcome to look into those resources. Thank you.
And thank you, Thomas. There is quite an interesting question. As you are speaking with listed and other companies a lot, what seems to be the main reason for resistance of fully embracing ESG? Or is there any?
Sorry, come again.
What is the main reason for resistance when companies are telling that, no, not right now, we are not fully ready to implement ESG?
No, I think it is a matter of resources. It's a matter of and cost, obviously, and also what I said. It's probably more about a perception that it's about compliance and just reporting and a necessary thing instead of seeing these opportunities that both Kathrine and Mihkel talked about. I think that is key. It's like I quite often compare it with like an ERM risk framework that you implement into an organization. The value of this is actually when you do implement this kind of framework into the organization and in your decision-making processes, you actually take into account risk questions, or in this case, the sustainability aspect. Then you get the value out of this, and you will impact your long-term performance. And I think that is key for all stakeholders and all corporates to see this value of actually driving this work.
Thank you very much. As we are short in time, I propose that we take one short question for everyone. Can you all think about how do you measure your social impact and your activities, human and environmental? Do you have any KPIs? And what can you suggest to the beginners or the companies who are thinking how to measure all of it? Can we start with Kathrine again, please?
Yes, in our sustainability report, it's based on a standard called GRI. So it's Global Reporting Initiative. So that has helped us how to measure this. But I think that you should try to also look at the different, as I said, the value chain, your own business, look at different parts of it and combine that with the stakeholders. Who are the stakeholders here? And what are they interested in? And what, as Thomas was mentioning, I think it's important to look at opportunities here, new business opportunities. So it's difficult to say that you can use the same type of measures for everything. But I think for us to be based on the standard, international standard, it's also good because then you can also be compared to others and you can compare yourself to others. And I also think one thing that I really want to point out also is that I think it's very important to look at others, to network with others and to learn from other companies, other businesses. And it's not necessarily in the same industry that you find good examples, but you can also, if you look at what others are doing, you can get inspiration and knowledge, because I think also a key here is the knowledge. In order for it to really get integrated in your operating business, you need also education. You need to be better informed about these things, because then I think also that you're not so afraid of starting to really start to measure and start to take on this stepwise approach, like you said, Thomas, if you really have a better knowledge about these things. So and the employees is also both to, I think Mihkel was mentioning it, but I want to take the opportunity to really highlight that it's very important for to work on these things, to keep employees also to stay in the company, but also the future employees, the future talents, and to recruit them, to be able to recruit them, especially young generations, not only interested as consumers, but also where do I want to work in the future? So I just wanted to take the opportunity once I had the word. Thank you.
Thank you, Kathrine. Mihkel, what is your view on this KPI thing and measuring everything?
Yeah, sure. So right now, already mentioned ways are, I think, relevant. This GRI, greenhouse gas protocol, or this kind of norms that are most recognized globally is a good way to start. But for instance, the project that we are curating here in Estonia is called Environmental Impact Unit. And this is something we would like to implement here with the government, so that it would become a really objective way of measuring all the companies, products and services through the verification of government. And we have come up with environmental impact unit and defined what it consists of. So there will be this CO2 footprint, which is most commonly these days mentioned. There will be a water impact. There will be a number of species affected by companies' actions, and also circular perspective. So there will be 4 criteria. And if we would kind of objectivize it and ask for all companies to report it, then we could pretty objectively express also their results. And in the future, these days we have, profit reports. We should also have those climate reports as a mandatory part of, taking action. So this is something we are aiming towards. And let's say that we are successful with this project, then we would definitely like to export it from Estonia as well, because we are simply a dot on a map. But if we speak of individual level, then another thing we have done in this Green Tiger is that we have interviewed all the eco bloggers and this kind of people who are dealing with being green individually, and we have figured out 170 criteria how everyone can list themselves from 0 to 10 on a scale and figure out how green they are. I will bring only 2 examples. Pineapple is grown in faraway land for 3 years, then it's transported from there to here, very long distance traveling, transportation, and then usually it rottens on our kitchens, counters, right? How much do we waste food? And also the craziest example I have heard, there are people who comb their hair and they put their hair outside of their windows for the birds to make nests. So there are all kinds of crazy ways beyond, simply doing recycling and these kind of things, how we can measure ourselves. And what we are trying to do is we are trying to make it popular for everyone to understand their impact also individually.
Thank you, Mihkel. Thomas, would you like to add something to this?
Yes, I can just add a few comments. I as the others, GRI is something we follow, but there are a number of different frameworks. We have, for instance, in this ESG reporting guide, we pinpoint like CEO pay ratio, gender pay ratio, employee turnover, gender diversity, etc. Those are typical KPIs to report on. Of course, it, like Kathrine said, it depends a little bit in the environment you are. For instance, we are a US company. Diversity is really important for us, and we work a lot with that aspect. and also reiterate what Kathrine also said, that it's not only for investors, it's really for other stakeholders as well, like the employees and the customers, of course, but very much for the employees as well, to feel that you belong to these underlying values in the company. I think it's really, really important.
Okay, thank you very much. We're short in time, so I will just give you a short summary of our discussion in a random order. So what we learned is that look at your value chain and just project all of this to your stakeholders to see the big picture. Use green energy, renewable packaging, etc. Travel, control, all these things very well understandable. What is tough is when it comes to big investments. When the boards are discussing, when it's big, then it's really harder to get the result. From Mihkel, we learned that even heavy industry can see its business model as circular. And this is quite hard to believe today, and this is our future, actually. And then the advice for the companies who are not doing so well today, it is, even though put ESG into your strategy, start doing it today. So when we learned that in Nasdaq, there is actually quite a lot of support for ESG matters. There is support to improve transparency, and there are instruments to measure those. And also what I liked a lot is it's possible that Nasdaq is facilitating dialogue between the issuers and the investors. Magic word GRI, of course, and quite understandable for everyone. And what was very nice to hear is that learn from others. Learn from others. It is listen to success stories. There is a very funny Estonian saying that clever people learn from the mistakes of other people. And now, to learn from good examples already made and success stories, I'm handing over to Riitis again. Thank you very much, Thomas. Thank you very much, Kathrine. Thank you very much, Mihkel.
Thank you.
Thank you very much.
Thank you.
Thank you.
Yes, thank you, panelists. And it was really very interesting and a lot of valuable information. So now, before we will be moving further, we will continue. I would like to remind all our audience to ask questions, because this will be the last chance to get answers during our conference. So welcome for your questions. And now we're moving to our third panel, where we will learn real success stories, as just Eric mentioned, to learn from each Baltic state on how companies came to the idea to introduce ESG, what was their way, what were the challenges and the lessons learned. And let me introduce participants of this discussion. From Latvia, we are pleased to see Gatis Kepitis, Corporate Development Manager at Latvia's Finieris, a woodworking company group, which also involved actively in forestry, adhesives, and engineering. 2,000 employees selling to 60 countries worldwide and running manufacturing operations in 3 Baltic countries. And it's even in Finland. And it's very exciting to know that they are actively promoting sustainability principles for over 20 years. From Estonia, we are pleased to see Ragne Masel. She is the head of ESG at LHV, Estonia's biggest domestic financial group. Her main purpose is to act as a catalyst for change within the organization and make sure LHV delivers on its sustainability ambition and promise. So it's a perfect example that even you are not involved in production, heavy industry, you as a business entity can do a lot in ESG area inside the organization and outside it. And from Lithuania, we are welcoming Romualdas Tragienė, She is a CEO and co-owner of BICG Lab, the largest cosmetics production company in Lithuania of natural beauty. The core of BICG Lab philosophy is remaining nature and innovation. So let's listen first for the story of each company, and then we will have a discussion. So let's, Gatis, so welcome, your turn.
Hello, it's nice to speak at this conference, and I will focus our story on our understanding of ESG elements. And we think that the discussion itself is a very important prerequisite for having that, what is coming next, because the recipe for finding a real solution must be really well understood first, and then we can even tailor-made it in some cases. And let me start with a provocative phrase, because it's not really good to start with, let's say, importing some slogans from even other continents, like cutting forest is bad, and because this is not really applicable in the Nordic context. The Nordic region itself is a leader in sustainable forestry practices, and forestry and bioeconomy at large, they are part of the solution, not the problem. The real problem actually is this disbalance between various elements of ESG. And restoring that balance, I think, is what we need to do all together. And we are really looking for the help from our partners as well, for the financial institutions and for everybody, because we would like to do it the real thing, not just greenwashing. So that's the starting point. Okay. Just a few facts about our company. Sustainability agenda is very high in our corporate, let's say, approach, and we have been doing it since incorporation in the early 90s, actually. Of course, we have been learning from our own mistakes, and it's not been that easy. And I will tell you a few examples how it happened. But of course, we have to understand now that the new agenda is that the money follows sustainability. And in that circle that you see, that never-ending circle, it's actually our value chain. It's the business of ours. And we have to find the place how it is fit for the future and future-proof, and can deliver solutions not just to business, but to environment and society as well. So let us start with the element E. So these are the words that we can see very often in our corporate strategy documents, and we also feel them and hear them in our everyday business discussions. And I must say that they are more and more part of it, and even though it's not the mainstream yet, but it's coming, and it's coming very fast. This is the concept of our product value, where everything starts with sustainable forest management. But again, adoption of standards takes time. While the wood certification standards like FSC and PFC were introduced already times ago, like 15 years or more, then just this EPD, or Environmental Product Declaration, new concept, was made ready just last year. But the idea, of course, is there since our incorporation, as I said, and I can mention two examples. One is our energy shift from fossils to renewables. The first phase, what we did was we understood that, of course, plywood production is a very energy intensive industry, and we need to find a way how to shift away from fossils, from natural gas. So we started to use our own byproducts from production. But now it's the second phase already, where we are aiming for using recycled wood, and therefore we have invested in more advanced equipment for higher temperatures, etc., that can deal with chemical compounds, etc., etc. So this is like a practical approach in this field. Another example is that we use wood products ourselves in building our factories, like we did one 15 years ago in eastern part of Latvia, and also in Estonia. The last factory that we built, it was done in wood, and it was also learning from mistakes, learning from good things, and in feeling that all the benefits of ESG in practice. So, and of course, for the future, it's very important to be in line with the Green Deal that was mentioned several times today, and all the ESG initiatives is a great tool for doing that. This is quite a self-explanatory example where our basic product or our core product plywood is shifting away again from fossil glue to bio-based glue. It's back to nature in a way. The next is more futuristic part of our business, which really shows the potential of bioeconomy. And this, the product, the final product of it is not measured in cubes anymore, like plywood is, cubic meters. It's measured in grams, and grams costing several hundred euros, which is a big difference and a big and different approach. And we have actually invested quite a lot of money in that. If we take the full cycle, it exceeds several millions, and it's both in technology development and in research. So we also feel that it's coming. So about the S part now, the society. Everything starts with our values. And while the values have been unwritten since incorporation, in recent years, we have been studying them more actively and discussing them in our company. And several hundred people have been involved in this. And we have tried to do it both ways, like top down and bottom up. It was the discussion happening in the boardroom and discussion happening on the shop floor. And it has been some international touch as well. We have involved some sales offices of ours from foreign sales offices. And then, of course, we tried to arrive at some practical and catch points also with some artistic touch. And the very goal of it was to arrive at some actionable and practical points that you can use in everyday life, like our employees. They can look at safety, for example, from 3 angles at least. One is this physical safety. They wear the protective equipment. Of course, in production, it's not unthinkable to do otherwise. They have to do financial savings. They have to pay taxes, which is self-understandable. And of course, if we take another element like informational safety, we have to assess critically what we read, what we see in social networks, etc. Trade union is a long tradition in our company, and it's actually a central tool for social dialogue for negotiating the employee well-being. And actually, it helps to avoid this us versus them perspective. And if you take automation, for example, that comes in production inevitably. So it should not be viewed as a job loss issue. It should be viewed as a solution that helps to deal with aging population. That was mentioned today, that helps to deal with gender equality, because if you have modern equipment, the button can be pressed by anybody. So you don't need muscles to do it anymore. Of course, we have various examples of projects that have wider impact on society, starting from forest days, where we, together with families and local municipalities, plant the forest. And we have educational projects, we have sports projects, and just an example that our place where we host our summer sports events has been awarded the cleanest beach of Latvia award for several years, and awarded the blue flag. So it's also kind of an attitude, and we have, of course, more examples, but that was about the social part. But I would like to end the social part with this. Now it's the time of pandemic, and this really demonstrates the level of trust that we have inside the company, that the employees themselves, even from the shop floor, they're ready to go and say they act as ambassadors, as of really messengers of our values. And it takes guts to do it, to be put somewhere like posters in Riga or circulating on social networks. So this really illustrates that we are ready to do more than just in the need of our company. We are ready to take a very active stand also for the society. Now, about the governance point. Of course, we are following all the megatrends from this short-term value maximization to this balancing of long-term interests of stakeholders. And actually, our company was established back in the 90s with a view of creating sustainable workplaces for ourselves. And that mindset has been kept for years. And it's kind of easy to make this balance for owners and employees within the company. We have been even asked last month, actually, to deliver a presentation on the European level seminar of trade unions and to share our experience there. So it's kind of good to see that these kinds of things are also appreciated somewhere else, not just in our company. And of course, it's very important to engage the employees to the common goal. And the new strategy that we're having, it's demonstrating that this engagement is hard, but it's worth it. Meaningful work is very important. And one other example that how we are gaining this owner-employee focus or balance is that we have a share option plan for our employees. It has been active since 2018 now, with a total value of around 6 million euros, and about 230 key employees are involved. So this is again a tool how we can make owner-employee balance even closer and align the interests of long-term owners with the short-term of employees and then etc. And of course, another element where owner consent is needed is this. In a capital-intensive industry like ours, we need high reinvestment rates to keep competitiveness. And of course, it goes in cycles up and down. And now we are preparing for the next breakthrough. But the idea is that we are ready to reinvest. We are ready to go financially as well. And of course, we need external partners. And this is just an example how we're transforming our platforms from, let's say, 20 years ago to nowadays. Since 1996, Latvia's Finieris has been maintaining a platform for long-term development of forest industry stakeholders with the forest science in center. But now we're adding also chemical science and material science stakeholders to keep up with the new challenges and to deliver the results for society and environment, and of course, still earning money. And this is, again, just an example that we try to unite the interests of several viewpoints. Like we try to speak to 3 ministries simultaneously: Ministry of Economy, Ministry of Environment, and Ministry of Agriculture. That is really a common perspective that will put our sector for future-proof. Again, just to sum up, ESG is a powerful tool and we believe in it. It just has to be applied very carefully, and we have to understand what we're doing. And we are aiming for a balanced discussion first. We have to balance the biodiversity, climate issues with responsible business and workplaces. And EU Green Deal is not just about E, environment, but it's also about S, social, just transition. It's also about G, governance. And again, this dialogue is what will bring us to the future. And actually, we are ourselves now working with external partners to see how we can fit this ESG reporting to our circumstances, to our conditions in our company. Thank you.
Thank you, Gatis. It was really very interesting. You are so long involved in that, and you are looking so long term. So it's really very impressive. Thank you. So now we are moving to Estonia, and let's listen for the story from LHV. Ragne, please step on our virtual stage.
My name is Ragne. I'm from Estonia, and I work at LHV. So it was already mentioned before, LHV is the biggest domestic financial group in Estonia. We offer the traditional banking services here in Estonia, but we also have a business line in the UK. And on the UK business line, we're working mainly with global fintechs and startups, offering them the traditional banking infrastructure and payment operations possibilities. So we are an Estonian company, but with a very global mindset and a global ambition, and now with a sustainability ambition as well. I'm not going to go too much into the mechanics of ESG and banking in my presentation, because that was very thoroughly discussed in the first panel. But I will try to be very practical in describing our journey and our story with ESG and sustainability in general, and just hoping that everyone listening will have a few valuable takeaways from the next 5 to 10 minutes. Can I please have the next slide? Thank you. So adopting ESG and actually starting off with sustainability, we are very early on the journey. And I think it's very important to mention it here. We know that we have a long way to go, but we have set our ambitions and we have set really clear goals, and we are working tirelessly on achieving them. So we started our sustainability journey even a little less than a year and a half ago. Some in Estonia might call it a bit of a revolution, what we did in our bank, but I would call it a grassroots initiative. So our ambition to be more sustainable actually grew bottom up, and it grew from our own organizational culture, and a culture that is very much kind of focused on autonomy and taking risks and trying out new ideas. So our own people started asking questions. Talent started asking questions when they came to job interviews, and at some point it just kind of escalated to a bigger company-wide hackathon where we actually took 2 days, about 80 people, and discussed different ways on how to become more sustainable as a financial group. So why I'm mentioning that the grassroots initiative and the importance of our own employees is that when I joined the company 3.5 years ago, we were a little less than 300 people, and today we're nearly 600 people working in the group. And the average age of our people is 31. So the average person working at LHV is 31 years old, and I think that really clearly demonstrates that there is pressure from employees and talent in general to work at an organization that actually thinks about its effect on the E level and especially on the social level as well. So I think we started feeling the obvious pressures, to be honest. The pressures were very obvious and impossible to ignore from investors, the public in general, society as a whole. As a bank, there's a lot of pressure coming from regulators, policymakers, customers in general, investors, and as mentioned before, our own employees. Organizational culture is very important here, and it growing from bottom up, I think, has been one of our strengths so far. It was never an executive decision to kind of decide that, okay, from tomorrow onwards, we're going to take ESG as a strategic goal. Of course, the board has to come aboard and transform this kind of sustainability mindset organically, but in our case, it was really kind of a bottom-up grassroots initiative and grew into a strategic goal very quickly and organically. Clearly, there are a lot of obvious economic benefits in being more sustainable as a business and moving towards a greener economy, but I think it's also very important not to think about ESG and sustainability as a pressure when it comes to regulation, or as a pressure from society. I think what has been mentioned here in the panels a lot as well is, I think, the core of why ESG is important is that you need to know how to kind of find the opportunities and the possibilities that a greener, more sustainable, more inclusive economy offers. And I think if you focus on the possibilities and the opportunities rather than the pressures, I think that's when you will be successful in the long term. Can I have the next slide, please? Of course, when you embark on a new journey, there will be challenges and kind of problems and issues that you will face. I will just kind of pinpoint a few issues and a few challenges in this slide. I think very important thing that hasn't been mentioned maybe too much during this conference is actually internal capacity and internal resources. And what I mean here is actually the knowledge, skill, and know-how of sustainability. And one thing that I would mention is just because you understand sustainability as a mindset, it doesn't mean that you are skillful in integrating ESG into your business processes. So skills and people with ownership in ESG matters is very, very important. And one of the issues that we faced in the first phase of our sustainability journey is that who are the people that are going to take ownership in the issue? Who are the people who are going to coordinate processes, and do they have knowledge and skill set and internal capacity to actually coordinate that pretty tricky and complicated processes? Overall, I think ESG is a change management project, and it is very much connected to your organizational culture. In some cases, what we have felt that in some cases it's also a kind of a disruption project. It does, in some cases, disrupt old ways of doing things, and it does require a cultural shift and a cultural change to happen, both within the organization and when we look at business processes, and also when we look at people and mindsets. And the mindsets and kind of understanding of the sustainability mindset of people on executive level. For example, my own background isn't finance or banking at all. I'm leading ESG and LHV, but my focus and my kind of strength and know-how is in organizational development and change management. And we have taken the kind of the route in LHV that ESG and sustainability is first and foremost a change management project. Of course, it's also very much related to risk management and processes and business lines in general, but if we're talking about a cultural shift that needs to happen within an organization, it has to be taken as a change management project. Of course, what's very important is also how you manage ESG and how you manage and lead sustainability activities within your organization. What we have learned is that sustainability needs first and foremost for the board to be on board and understand the challenges and understand the topics and the aspects of sustainability, but also it cannot be merely centrally managed. For example, we believe that if ESG as an activity or as a goal is only kind of stuck within one team within the organization, in some companies it's marketing, in some companies it's a designated ESG team, but if only one or two people or one or two teams are actively focusing on the topics, then you probably won't be successful in the long term. And of course, one of the biggest misconceptions about sustainability is that it's a marketing issue. Sustainability is not in its core about brand messaging and marketing. If you can't kind of comprehend its complexity, and if your organization does not understand its challenges, then you might end up merely scratching the surface of the opportunities that a more inclusive and more greener economy really has to offer. So facing and overcoming challenges, I think, can first and foremost be kind of remedied with building your own capacity, building your own knowledge, and kind of understanding on an executive level that you need to sometimes involve experts on the field, and you need to build your internal capacity, because who will at the end of the day make that shift within your organization? It's the people. So no board can really achieve its ambitious goals. Your people need to come on board as well, and you need to have that internal capacity. Can I have the next slide, please? Lessons learned, and what I would recommend. Clearly, I'm just talking from my own perspective and the perspective of our own story that's only been lasting for a little over than a year. I think the toughest part is really getting started. And once you get started, you can really kind of start seeing how the little pieces of the puzzle will hopefully kind of start falling into place. What we have found is really important within our kind of ESG governance structure is that the topic itself needs to have ownership. We are very lucky in our organization to actually have a small team focused on sustainability. But I know clearly not all companies have the resources to have designated teams, but I think ownership of the issue is a big recommendation that I would kind of share here. Leverage your own people. Like who are the people that you already have in your company? Maybe you don't need new people and new teams and new expertise. What are you doing already? So a lot of companies that I talk to here in Estonia, they say that, sustainability and ESG, it seems like such a huge topic to kind of learn and do, and where do I get started? In more cases than not, you are already doing something. So really look into your activities and your impact and your business and your culture in general, and see what you are already doing that kind of falls into the umbrella of being more sustainable. It could be related to the environment. It could be related to the role that you play in your local communities. It could be what you're doing with your workforce or your employee happiness. So there's probably something that you're already doing, and that's a very kind of a good starting point in general. So generally, I think we should be moving towards a more kind of conscious capitalism and being more mindful in general. So I think another recommendation that I would really give is to practice good old-fashioned caring and empathy in general as employees and as executives. I think that is a very good starting point as well. And the sustainability mindset on an executive level is actually a sustainability mindset on a personal level as well, because people sitting on boards and leading companies, there are people in their personal lives first and foremost. So kind of practicing being more mindful and more caring and more considerate and kind of developing your own sustainability mindset, I think shouldn't be overlooked in the case of corporate success when it comes to ESG and sustainability. And I think the last thing that I would really mention here is that we are dealing with it as well today, is that sometimes you need to admit to yourself that there's probably a lot more that you don't know about the issue than that you do know. And circling back here is also the kind of the core message that I would give today is build your capacity and have an open mindset. And it's okay if you feel like it's an overwhelming task to make the sustainability shift. And what was mentioned in the previous a panel as well is that in most cases, no matter which company you're working for or in or sector, in most cases you do not have to invent a wheel. There's a lot of good practices in ESG. There's a lot of good practices in becoming more green and becoming more sustainable. And I think if you just look around and find like-minded people and like-minded companies to work with and to share experiences with, I think your own journey towards sustainability will be more fruitful. But that's it for me. And hopefully some of those recommendations do bring value. Thank you so much.
Thank you, Ragni. It was really very inspiring speech, and all your recommendations, I think, are very valuable. So, and let's now drive to Lithuania and listen for the story of success told by Romualda.
Yeah, hello. It's rather difficult to say something new when you are the last one, but let's do. At least it will look like a summary of what has been said before. So I believe that every little counts in many ways, and the same applies for sustainability. So you can take from small steps and make a small journey. Of course, I will not take all the long journey of BioClub. It's 30 years long. And I remember when I joined this company 16 years ago, the hot topic was corporate social responsibility. It's now it sounds like the old school, but 15 years ago it was the trend, similar like sustainability, but it was mainly applied as donations, as some financial or other kind of support to society. But now I see a shift and new trends coming. And I will give you just a very short plan in 3 steps, how to make a sustainability program or a strategy. You can call it always. And you have to find answers to questions like why, who, and how. And it will be very easy then. So let's start with why. And well, we can see facts that they're pretty strong facts. In just 200 years, our world's population has grown from 900 million to nearly 8 billion people. That's a lot. It's a huge shift in numbers. 10% of world's population, they're the highest polluters. They make 50% of CO2 emissions. Well, this is like we, urban people. And the World Economic Forum 2020 discovered that 5 global risks are coming from environment, from extreme weather events to great loss of biodiversity. And this also applies to us because as a production company, we use a lot of natural resources. Even like birch that was mentioned by Gatis, we use the juice of this tree, and we use berries and other natural things. And in this picture, you can see not some far away Irish or US farmer, that's me. I'm taking care of organic garden. We have planted fruits and berries. It's near Vilnius. And I'm taking care of healthy living for my family and maybe more people. And I was thinking, just actually taking the berries, if there are so many issues and challenges globally, what can we do? A small company, only 70 people, 70 employees. I can take care of my family, 5 people, of my company, 70 people, but can we do more? And I found out that in company, inside the team, there are actually more people who are interested in this topic. And I just started listening for messages coming from employees who is talking about climate change, about waste management, about resources. And I just was spotting this ambassadors and identified the supporters who might be like the ambassadors or the team. And we just asked them to join this initiative now formally, because before it was more like maybe some hobbies, something behind the scenes, behind extra to your career. And it's more like a club, but we have a leader, because I believe that every initiative has to have a leader, otherwise it's lost, because everyone has so many duties and tasks and deadlines that you can get lost very easily. So not accidentally, but our leader he's also quality manager. So it's organically fit that he takes care of standards, procedures, measures, and he's very close to resources and waste management. And extra, he takes now leading the team of sustainability. And what we also understood very quickly that we have to agree about what not to do. Not to do list was quite difficult to make, because in the beginning you want to make everything. And people have a lot of ideas, and they just say, if they feel that there is an attention from management, they just start pouring out everything what they have in their mind. And we made a list not what we will not do. For example, we agreed that we will not visit the abandoned dogs and cats, because so many companies are doing this, and this is not neither original nor does it fit our products and our customers. So we just narrowed that down and agreed that we will take the projects which are good for the company, for us, which fits the strategy, and also the projects that are good for our people, employees and customers. But for example, any healthy projects, healthy products, so it's beneficial actually in the end also for company results. And yes, we keep talking and walking about sustainability because not everyone in the company is involved. So that means that we have to spread the news and involve it in our agendas and quarterly meetings and monthly reports. So these things don't happen very easily. You have to support it as any other projects. Like Ragnar mentioned, it's like a change management. So you have to follow all the rules, starting with awareness, why we do that, and finalizing with achievements, what we have achieved, and was it worth it or not. So how it looks in our roadmap. So in the beginning, it was more like ad hoc ideas. Anything could happen, just from car sharing. Just it was initiated by employees. They agreed to cooperate and come to work. It's outside of town, not by single drivers, but like 2, 3, or 4 by teams. And they calculated kilometers, how many kilometers they have saved, and exchange that to cinema tickets. And of course, now the driving to office is closed and cinemas are closed, so it would not be invalid anymore. But in 2018, it was quite a motivating project and very easy to calculate what was the final result. So we started from very small things, and we made a roadmap for 2019. Most of our initiatives were about the product itself, less plastic and recycled plastic, recycled paper. So we did a lot of minor changes in our ingredients just to save the amount of plastic. So we could also easily measure how many plastic we deliver to the market, and can we reduce the amount of waste, what stays after like a shampoo is used and you throw away a bottle. So we, for example, even the small bottle closure, we decreased it by 15%, and it appeared to be quite many kilograms in the end of the year. And actually, it also turned to be reduced euros. So it was also worth financially. And when we got this present with COVID pandemic, and we saw that the main topic was health, of course, the health of our employees. So we did everything to keep them safe and also to continue working in production. They could not stay remote. But what else we saw that a lot of people around are suffering from this anxiety and all these threats. So one of our initiatives last autumn was take care of all school children who still went to school, and we decided let's make like that. Every class in Vilnius should have a hand sanitizer at class. We called Vilnius municipality and asked, how many classes do we have in Vilnius if we count every school? And we said 7,000. Okay, we'll give you 7,000 big bottles with pumps, and every school should have it. And we want to keep our kids at school because we want our employees to be at work, not at home taking care of their kids. And that was a big project, but we felt so proud. It was because it was very correct at a good time and with good purpose, and it was also included in our list. And for 2020, we have much bigger projects which are coming with about transparency, digitalization, and automatization. And step by step, we are coming to a new production plant, and we have finalized the project, and we focused a lot on sustainability. So we'll have less CO2 emission. I'm sure now already I know that we will use 100% green energy. Although it's a huge investment in the beginning, but we agreed that we need this for two reasons. First of all, it's very good marketing tool. It's a good advantage and benefit for our consumer. And second one, it will pay off in 5 years. So the sustainability is also the same investment project as any other business investment. So for employees, we will have ergonomic workplaces. I hope they will be happy to come to the office, not staying at home forever. And the happy end is our happy customers, because they are so curious and involved. They take care and they need to know about the production, about the producer. They are asking a lot of questions. How we produce, where we make our products, do we use these materials from sustainable sources or not? And if they are happy about the production place and the producer itself and its values, so they are ready to pay higher price. And finally, of course, everyone is expected higher returns and better margins. And that's why our shareholders let us do these projects, and they expect the return in a few coming years. And I'm much sorry to say, but I have to rush to the board meeting. It starts at 3 o'clock. The sustainability is not on our agenda, but we'll see. Maybe we have to include it at least once per year, because I see that the board is still a little bit further from the management. The management is much closer to sustainability issues, but it's spreading, like a virus, but positively it's spreading. And we keep talking and walking the sustainability way.
Thank you, Romualda.
If you have a question,
yes.
I still have few minutes, but in short time I will leave you. So sorry.
Yes, we have here the question about the EU law requiring directors to include stakeholder interests in their decisions along financial interests. So if you can shortly, Romualda, have you had any kind of discussions on the board with the board directors, the board members regarding this topic? Or you have already this practice on the board?
It doesn't sound like a new thing. So I guess it's included in our.
It's already. Mm-hmm.
Yeah.
Okay. And before you leave, the shareholders, of course, you are the co-owner, but other shareholders, how they saw this kind of initiative of transformation towards ESG and sustainability? Were they happy, were against, or conservatively looking to these initiatives?
Difficult to say, but maybe they don't see the other shareholder doesn't see so much initiatives as I do, because I work on daily basis, so I see any details and I love it. But if you are not on daily basis included in company, of course you can see only the smallest, the high level of company work. But we share the main achievements and results. And for example, media, what is especially when we do something good, it is in the media. It attracts a lot of attention. It's good for the company, and shareholders love it because they believe in company reputation and recognition, and the profit. It's not always comes or doesn't come because of the sustainability matters. So it's like an added value, and I never received any cons for the initiatives. For example, when we decided to make this hand sanitizer campaign, I got yes for extra budgets during 15 minutes from free board members just by Facebook, like in X Factor, you know, you have yes, 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 and that was 20,000 euros extra in the end of the year during COVID times. But we all agreed that it is nice to make nice things, you know, especially during crisis. So, and the money will come later on.
Yes, thank you. Yeah, it's a good story. Thank you very much. So we will let you leave us and go to the board meeting, because CEO is one of the most important persons in the boardroom. Thank you once again, Romuald, and we will continue our discussion. So what Latvia's Finieris and LHV experience related to the kind of reaction from the shareholders side when you started the discussion and so on? Was it like you know, some resistance or not understanding, or why we need this? What will be the you know, if we are going to invest something, maybe there will be some lower rate of return to that investment, and so on and so on, because especially LHV is listed company, so it's also so two are different companies, so it's privately owned and listed. So maybe you can share your
clearly the number of shareholders is very high, and it's very difficult to kind of say something very specifically, but I have not gotten any negative feedback in our sustainability ambition at all, and I really don't think that there really exists any. If we look at what's going on in Estonia in general, in the Baltics in general, and in the world in general, then there's so much talk about sustainability being directly linked to return on investment and then return on equity. And I think as long as the investors and the investor community can see and kind of historically see that all the kind of the risks that the company has taken and all the kind of the new initiatives that they've tried, that they've been fruitful and they've been successful, I think the investor community is also kind of very educated to know that, and the trust that they put in the company is kind of justified. And when we're looking at our journey, generally as a listed company and as a company now that has very clear sustainability ambition, I don't think that the shareholder really has anything to worry about, because we have made it very clear that sustainability as an ambition is clearly linked to our potential as a company and our potential as a business. And we have been very vocal and very open about kind of raising awareness about the possibilities and the opportunities of a more kind of inclusive and a greener economy.
Thank you, Ragne. And Gatis, Latvia's Finieris is the privately owned and actually production company, so it's different comparing with the banking and financial business. So what about your shareholders' view and opinions?
Right. As I already said, our company was established after privatization in the early 90s, and actually one of the goals was to create sustainable workplaces and with a long-term look on the company development. And I liked very much one of the previous panels mentioned this, the short-term gain may go up, but the long-term multiple may go down, which means that actually you end up with a lower company value anyway. So, and that's, I think, the case. It provides opportunities, not really costs, but it provides new opportunities for the future. And we have to be part of that, unless, I mean, this is no other way to go. It's really a long-term story, what we are aiming for.
Thank you, Gatis. So let me thank you both for this panel, and I would be summarizing the whole panel 3 together with the summary of the whole conference. So I would like to come to the end of our conference, and I would like to express many warm thanks to all our speakers for extremely useful insights and valuable recommendations. I'm sure that each of us collected lots of good takeaways from this event. These discussions were so involving that I felt that we spent not 3 hours, but just about 30 minutes. So it went really very, very fast. So here is the short summary of what we learned, what we heard. We learned about European Commission plans and even targets and goals regarding ESG and sustainability. Then we understood that there will be a smaller and bigger crisis, but top managers and boards should be very agile to use them as opportunities to reshape themselves and to develop further. At the first panel, we realized that ESG among the top priorities on the agenda of the banks and investors. And this is a very important signal to all companies in the Baltics when planning the development and gaining competitiveness. I want to remind three key messages we have learned. No trade-off between impact and profit, both are expected. Access to finance for non-sustainable businesses will significantly decrease. ESG will become priority in all industries, large corporates and SMEs, and banks and investors are ready to assist you in that ESG journey. From the discussion during the second panel, we realized that approach towards ESG attracts more customers and business. Companies should look at their value chain, have clear goals, and be very transparent. It is not about developing sustainability strategy. It is about sustainable business strategy. ESG risks are not only negative, they can create new opportunities. Act now. Even if business is suffering today, take ESG into your strategy and learn from others. Clever people learn from the mistakes and others do. We should seek for inclusive social dialogue as a key tool for engaging all stakeholders in building our common future, we learned during the last hour panel. First, understand and then adopt the relevant standards of your business model. Get started and involve people and the process who want to take the ownership of sustainability. Build capacity and keep an open mind. In most cases, you would not have to invent a wheel from the scratch. Transformation requires the development of sustainability mindset on a board, in executive team, and of course on your personal level. And there are three-step plan to go sustainable. These steps are why, how, who and how. What can a small company do and can we do more? Of course it is possible, and we learned today from BICG Labs. And create a team of supporters and walk the talk and it will go. So I would like to thank you all who participated at that conference. Your questions made this conference even more valuable. We are going to share this video record of this conference so you can share that record with your colleagues or business partners, or even watch it again if you see that it is valuable for you, or at least some moments. And see you next year, and let's meet in person, not anymore online. So thank you all and goodbye.